terminal will be 475. But we think that in terms of communications, the bank will keep its options open, which means that they will not commit to any additional hike. They will look at the data. Potentially, there is the risk that they could skip the June meeting and hike in August. So I think my interpretations of tread it carefully is really to acknowledge the fact that quite a significant amount of tightening has been done since the cycle began. Rates are in restrictive territory, and we know that monetary policy acts with lags. So potentially, the real effect of these hikes is still to come. And so for this reason, the Bank of England will remain, quite open-minded, and will try to trade off the risk that was basically said, that this increase in prices can be entrenched in expectations, versus the risk of over-tightening and generating an excessive slowdown in economic activity. And a decline in inflation below targets at the relevant policy horizons, which is 2-3 years down the road.
So Sylvia, square that then with what we're hearing out of the ECB and arguably the Federal Reserve. Talks about perhaps not hiking at all or hiking more over the summer. The ECB, as Anna pointed out, quite clear that their last hikes might just happen this summer as well. Will the BOE continue to hike into the end of the year? Is that idea of coming to the end of the rate tightening cycle limited to the US and the ECB alone?
Det er typisk, jeg var skikkelig penger nå, så Hæ? Hva skjedde nå?
The tightening cycle before the summer. We have the last rate hike as a baseline case happening in June. We see the risk of that being postponed to August. So the idea that there can be a hike in when the bank releases the monetary policy.
Faen, ikke jeg glipp av en jævla feit gevinst da.
But again, we would think that
bare for dere dritt slå av og på PC-en.
Cycle by the summer.
Er det mulig?
Sylvia, thank you very much. Thanks for joining
us. Var helt der nede der slå av PC-en.
Talking us through expectations around US CPI and the Bank of England. Coming up on the program, back to earnings stories. Disney is out with results after the bell today. More on what to expect from the entertainment giant next. This is Bloomberg.
Så long dogs fra 159, 157. Yeah.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment.
Så long fra
I think the
159.
recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover, but with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
Bare gevinst da. Ta gevinst. Ta gevinst. Han gikk det mye kjappere. Han gikk det jævla mye kjappere. Det hjalp å slå av på PC-en.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
This is Bloomberg Surveillance Early Edition. I'm Preeti Gupta in New York with Anna Edwards in London. A critical earnings report coming after the bell today for Disney CEO Bob Iger. It's the first full quarter since his return in November. Joining us now to discuss is Geetha Ranganathan, Bloomberg Intelligence U.S. media analyst, who was kind enough to wake up early for what's going to be a pretty important day for both you and for Disney alike. Geetha, walk us through the significance of Bob Iger's impact in the first quarter here. What kind of difference could he make?
Yeah, thank you so much, Kriti and Anna, for having me. So I think it's all about cost cutting. That's really what it's come down to, because the buzzword right now in the media industry is really all about streaming profitability. And remember, when Bob Iger came back to the company last November, he really outlined his strategy. I mean, there is a lot of realignment in terms of creative prowess. There is a lot of financial realignment, but obviously the biggest announcement that he made was this $5.5 billion in cost cutting. And it's, and I think what we're really looking to see is, have they made significant progress on that front? Because he kind of came out with all guns blazing. He had his whole strategic vision kind of outlined. Now we have to see whether he's really been able to execute.
Well, it's interesting that you talk about cost cutting specifically and perhaps jobs that are on the line, as at the same time, Disney's also dealing with its own fight in Florida with Governor Ron DeSantis at the moment. Walk us through how that might reflect into their earnings.
Ta gevinst nå.
Yes,
På den ene.
It's a lot of headline risk, and I think that is going to be an extended battle. But it's really more, about the politics of it. I don't necessarily see any of that kind of affecting the bottom line, and we think this is going to be really an extended battle.
Går short på nytt, men den er nettopp dekka meg på.
2 to 3 years, and I don't think it necessarily gets into any kind of legal settlement. I think it's all just going to be more political. But as far as we see the parks business, the parks is really turning out to be the crown jewel of the Disney empire. So believe it or not, this year, parks will be responsible for 75% of profits for the entire company. And they've really been punching above their weight. So this whole post-pandemic new normal for the parks has just been phenomenal. I mean, if we look at it in terms of profitability, if we look at it in terms of per capita spending, margins, they have really been going gangbusters. And this whole talk about, a slowing in consumer spending, or, the possibility of a recession, somehow we are just not seeing that in the numbers. So again, when they report today, we're expecting about $2.1 billion in operating income for the parks. That's over a 20% increase in profits. So parks doing really, really well.
Yeah, some real incredible resilience in some of those revenge consumption activities, Geetha, post the pandemic, I suppose. You talk about lower streaming losses and how that's going to be a real focus for the markets. For businesses such as Disney, Geetha, how do they go about getting to those lower losses around streaming? What are the levers that they pull?
Yeah, so, thankfully now the whole media ecosystem, as well as Disney, has kind of shied away from, going after subscribers at all costs. I mean, they were doing that for the longest period of time. They've ramped up about 160 million subscribers, but now it's all about cost rationalization. So there's $3 billion in content costs that they're looking to trim. There's $2.5 billion in non-content costs. And remember, Disney is a company that lost $4 billion in its streaming business just last year, but they are looking to kind of trim that pretty significantly going forward. So this period, we're actually looking, so last quarter, they actually lost $1 billion in their streaming business. They're planning to, those losses should moderate to about 850 million this quarter. And then we are going to look for signs in, those losses getting better and better. And remember, not only are they undertaking content cost rationalization, but we're also seeing them do a lot of things to boost the top line. So whether it's implementing price increases, whether it's having a new Disney Plus advertising tier. So a combination of those two, I think, will definitely lead to an inflection in the profitability curve later this year.
Yeah, tiering of pricing strategies and the resilience of their pricing power, really interesting to watch. Geetha, what about other brands, ESPN, Hulu, these areas of business?
Yeah, so those are really the two big question marks, Anna, ESPN and Hulu. What is the strategic direction for those two assets? So we know with Hulu, it's kind of 2/3 owned by Disney, 1/3 owned by Comcast. They do have this all-important date, Jan of 2024, when they need to kind of make a decision whether they're going to keep the asset or they're going to, sell it to Comcast. So we still are, it's what Bob Iger has said has kind of raised more questions than answers. So he's kind of said that all options are on the table. So again, I think that is going to come up in the earnings call today. We have to see what they're deciding to do with that asset. And then ESPN, you bring up a really interesting point because this is the first time that they're going to be actually breaking ESPN into its own segment. Remember, this was the crown jewel in the Disney portfolio, but obviously with all the cord cutting, with all of the secular declines in the TV ecosystem, again, we're kind of looking for some strategic direction here. Again, this is an important asset. It generates about $4 billion in profits every year, but they have to be really careful about the messaging. Okay, so if they're going to go deeper into, a direct-to-consumer solution, it has to be incremental, not cannibalistic. So again, we're looking to see what exactly they're planning to do with this asset going forward.
A lot of balls in the air, of course, as Disney juggles their earnings narrative after the bell today. Geetha Ranganathan of Bloomberg Intelligence, we thank you as always. As we wait those earnings after the bell, a quick check on those shares, though. They are higher by about 0.1%, though. And on the surface, it doesn't look very significant, but in a background where the rest of the market is trading lower on both sides of the Atlantic, that is actually a positive result, something we're going to keep an eye on throughout the day as, of course, we wait for the earnings after the bell. Some other stocks that we're watching, of course, Airbnb at the top of that list as well. Those shares down about 13% in the pre-market. They're talking about cracks in their travel demand. The outlook that a lot of companies are saying is still positive. The consumer is still spending. Well, Airbnb does not share that message and really getting punished for it in the pre-market. They're down about 13%. The other stock we want to watch, Occidental, buying back 6.5% of Warren Buffett's preferred stock. Remember the story that Warren Buffett not only helped finance the Anadarko deal a couple of years ago, but he's been kind of buying more and more shares. Some speculation over the weekend that he was going to try to take over Occidental in some capacity. Anna, he said, no, we're not going to do that. But Occidental is redeeming those preferred stock, and in doing so, losing a little bit of cash in the process. Those shares down about 1.6% as a result, Anna.
Yeah, that was something we learned at the weekend, wasn't it, from the Berkshire Hathaway meetings that took place. Now, Chrissy, coming up on the programme, the latest read on US inflation is out in just a few hours' time. We'll take a look at what markets are expecting next. This is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors who learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd pour it like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
Togevinst snart.
Surveillance Early Edition. I'm Kriti Gupta in New York with Anna Edwards in London. The U.S. CPI print due today at 8:30 a.m. New York time, just under 3 hours. Joining us now for a preview is Michael McKee, Bloomberg International Economics and Policy Correspondent. Waking up early for us. Look, this forecast, we're expecting inflation to come down. It's kind of a foregone conclusion. Does the Fed care about today's numbers?
Not so much, because there's another CPI report coming up by the time they get to their next meeting on June 14th. We also get a PCE index inflation report before that as well. But we are expecting some news today that might disappoint the markets, who do react to everything right away. And that's because inflation is forecast to come in basically unchanged on the month. We're going to see no change at all in the headline number. We got some energy price issues there. And then the core, just over the last 24 hours, has been revised up to a 0.4 change for the month, which keeps the month over month only a tenth lower. So we're still well above the level that the Fed is looking for, of course, that 2% target.
Yes, and so to the point, Mike, about the Fed cares. I mean, you mentioned that there's more data to come, so they'll get another chance to sort of look at the inflation picture before they have to make any more decisions about rates. But also, as Ben Rahm on the Markets Live blog points out to me this morning, we have 9 months of headlines slowing. So I suppose they take comfort from that trend, almost regardless of
Tatt ned risken, ganske choppy, holder shorten fortsatt.
Well, that is the feeling, and they knew that this would be, as they put it, kind of volatile, that you would have months where things don't go exactly as they plan, but in general inflation's coming down.
Ja, hvorfor shorter du ikke mer da hvis du tror det skal ned? For jeg tar ned risikoen, for vi nærmer oss CPI etterpå. Jeg gidder ikke ta for mye risiko, selv om jeg tror det skal videre ned. Så jeg bare holder bare 7 kontrakter nå. Det nok til at det svinger noen tusenlapper. Hvis du lurer på hvorfor ikke jeg shorter mer enn jeg tror det skal ned. For jeg kan gjøre dette 1000 ganger, så det spiller ingen rolle for meg. Jeg kan gjøre det 1000 ganger.
Mike, 30 seconds here. The rent levels you mentioned, the shelter costs. Why are the shelter costs decelerating faster, given that we are now entering or ending the rate tightening cycle? Can we see a bigger effect?
Du kjører breakout trades da.
At the beginning of this whole cycle, because rents were going up a lot. And it takes a while, about a year.
Du kommer til å prøve å sette deg stopplås her nede.
Into the overall numbers, and we saw declines starting to come during the pandemic, and now they're sort of flattening out to going up again. But we should see the declines that were a year ago in rents show up fairly soon.
Yeah, Mike, thanks very much. Really interesting conversation there ahead of the CPI data. Bloomberg's Michael McKee. Interesting, our guest from Barclays earlier on, Chrissy, was talking about core composition being really in focus, slowing services, but good price going higher. That was her assessment of what the core would show, and that would be, of course, in contrast to what we'd seen in previous months, where we'd seen goods prices coming down and services being sticky. So a lot to focus on when it comes to the composition of these numbers. That is it for early edition. Surveillance is ahead. They'll be speaking to Peter Oppenheimer of Goldman Sachs, getting views on the equity markets, no doubt. We'll have plenty more in the run-up to the CPI print later. This is Bloomberg.
Det dritsmart. Jævla smart. Jeg enda i shorts fra Monday Low. Monday Low.
After taxes and after accounting for the cost of living. For many, reaching a six-figure salary is a huge moment when you feel like you finally made it. But that feeling may not last long when you realize just how much taxes and the cost of living in an expensive city takes out of your paycheck. And that's especially true after 2 years of inflation. Hybrid and remote work have opened up so many more opportunities for people to choose where they live. So that forces the question, should I stick it out in an expensive city or try to find somewhere more affordable? So where should you live if you want to maximize your salary? Consider Memphis, Tennessee. The home of the Blues topped the list with a take-home pay of about $86,000. Tennessee doesn't have an income tax, and the cost of living there is about 14% cheaper than the national average. So a dollar there takes you much further. Texas is another popular choice, and it's clear why. 7 of the top 10 cities where $100,000 goes the furthest are in Texas, a state known for low taxes. Of course, there are so many factors that influence where you choose to live. You may want to be at the center of things, or be near family, or be somewhere where there are a lot of career opportunities in your field. It's not always just about dollars and cents.
DOJ or other authorities
Could face bigger challenges next.
It was going to keep Green World Cup. This is a 3.
As the economic picture does.
The OK is getting ready to make a decision.
Why do the biggest names in business choose Bloomberg?
Da droppa like, bestilt.
Bloomberg, top experts, great questions.
We have to remember, with rates being higher, it's more costly for people to borrow.
Our best guess continues to be that there are some earnings disappointments out there.
Part of the reason we have a challenge right now is the equity market is way ahead of itself.
It's one of those environments where the market is heavily biased towards pricing in a recession.
The consensus right now is expecting a recession to start really in this quarter. It just doesn't seem like that's going to happen.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene on radio, on television. It's Inflation Wednesday. Bramwell's been up all night trying to figure out the vectors of inflation. There's really no other story today, Lisa. There's this, that, the other thing. Farrow's on assignment. The answer is Inflation Wednesday.
So we've been worried about the banks. Now we get to worry about the fundamental economy and how much the Fed still has to do at a time when people are still pricing in rate cuts. And I think that's really going to be the focus. Is today the day where they price it out of market expectations simply because inflation is just too sticky?
You go right to the heart of the matter for me. We're going to be talking about this for the day.
Det var bra penger på shorten.
So stay with us here for some
Gevinstsikre litt, eller? For jeg er jo...
It's the inflation vector. And I think if you want rate cuts, the vector has to go down, is the game plan.
Yeah, well, either the vector has to go down or there has to be some sort of crisis. On the banking front, we haven't seen any real signs of a percolating crisis that's ongoing.
Dekka den som jeg var short her, dekka jeg nå. Short her fortsatt. Den har vært med hele veien her opp og ned. Nå har jeg bare 5 kontrakter liggende her nede. Kan holde shorten videre ned, men gidder ikke. Jeg tar ikke den risken nå. Det kan spike rett opp hit igjen, og da får jeg bare en sånn kjapp stopplås. Så holder posisjonen min short fortsatt. Så har vi gjort mange transaksjoner vi gjort nå.
Because there's been stasis, and that's what all of the reports have been reading are about, because the inflation vectors people are saying are sticky, period, full stop.
Do you think after the coronation, the King of England kicks the can down the road? I mean, is that what we're going to see in the debt ceiling? And that's what they do in the United Kingdom,
you think
right?
There's like a royal debt ceiling?
Royal
yeah, well, just because I'm sitting in this chair doesn't mean I can
Jeg har
comment
gjort 40 transaksjoner, og av 40 transaksjoner så er en stopplås på $34, en stopplås på $17, så jeg har stopplås totalt så jeg har tatt 900 kroner, og så har jeg tjent etter stopplås mine kroner, så har jeg tjent nesten 5.000. Og nå kommer det videre ned, som bestilt. Da har vi gjort
The problem with this is you could
1,
say,
2,
all right, when
3, 4,
services starts to
5,
cool
6,
off, you
7,
can see a
8, 9, 10.
reinflation of
40
the goods.
transaksjoner,
This is the
tapt
push-pull of the
950
bifurcated
kroner
economy
og
that leaves
tjent
people concerned
nesten
about a stickier
5000.
inflation for longer.
Quick data check.
Det
It seems to turn
er
on the
bra.
stock
Det
market.
er jeg
A
faktisk fornøyd
fractional
med.
down. SPX
Jeg har
down
fortsatt
7
short her, da.
$49. And the VIX to me is a big deal. It really just doesn't want to crawl out over 20, 18.02 on the VIX. In the yield space, I was away yesterday. Shock up 2-year yield 4.04% and 3.50% on the 10-year. BitDog's done nothing after that off 1,000 a couple days ago, 27,585. You think Pharaoh quotes BitDog? I quote BitDog.
Guarantee that he does not.
He does not.
Quote
And
Bitcoin
critically,
or BitDog.
in the spread space, I'm looking at 3 months 10s, which is coming a little bit of disinversion, negative 180 basis points. Petroleum elevated over the last 2 or 3 days. This is elevated to a morning brief. Lisa nailed this. She was at 2 p.m. on inflation, 2 a.m. on inflation Wednesday to get the brief right.
2 p.m., 2 a.m., still here. 8:30 a.m. is when we're really looking for that inflation read. I'm looking at the core inflation, much more than the headline inflation. The expectation is for it to come down just a touch to 5.5% year over year from 5.6%, but it was crawling higher in the prior reading. That is a problem. How hot does it have to be for this market to really sell off? Today, we do get sort of the other pole of the market narrative.
Da må du si til det var da må du si til det tallet aldri har kommet på, hvis jeg visste at det var sånn her skulle være. For du kan banne på han og sagt det til meg, hvis det hadde vært meg.
I'm off this story right now, but the truth is it's been 3 or 4 days of just ebbing away. Is that the right idea?
Well, the interesting thing is calm. Is good.
Så du fant en lik bil som din til 379? Du fant en lik bil som du har til 379? Og S, ja. S er mye bedre. Ja, det er det beste. Jo, det kan du høre på. Det er mye bedre. Beste av alle. Ok, men den er jævlig mindre.
Some sort of view into media and how the sands are shifting with the social media push and where people are really consuming programming.
There were look to remain Bostic and Scarlet Fu for that coverage late in the afternoon. Again, futures -7. He is in London, where he holds court as chief global equity strategist at Goldman Sachs. Peter Oppenheimer has decades of experience of extracting ourselves from the worries.
Ja, det er en veldig stor bil nå, da. Veldig stor idé.
Thank you so much for joining us, and I love what you say in your research note about finding neutrality, a neutral view. What do you do in the stock market when you have a neutral view?
Men du, verdens 60 deiligste damene som jeg fantaserer om hver dag. Nå tredje jeg live, jeg må legge på. Nei, jeg er ikke enig i det, men du gjør hva du vil. Men du kommer til å kjøre mye lettere med en 3, 100% sikkert, garantert. Jo, ellers kan jeg skal ta min på versen og på fiksen, ikke sant, for nå får jeg cash. Så kan du godt bruke min, og så kan jeg bruke din, for jeg kjører ikke så mye som jeg gjorde før. Da er min strøken. Nei, da kan du bruke min S, for den kjører du fint, den er fin. Da bruker jeg den store. Hvis du vil. For da kjører du gratis overalt. Jeg kjører ikke gratis lenger. Bare gratis lading overalt. Og det er strikkmotor. Min er strøken. Det er bare at den må fikses på med hjula og sånn. Se hva du gjør. Du har muligheten. Gjør akkurat hva du vil. Jeg backer uansett.
And I go to Bank of America saying for the first time since the 2008 crisis, there is evidence of a stock pickers market, of individuals going into stocks over ETFs. Is this something that you think is going to be persistent, that we are actually shifting away from some of the broad indexes and really meaningfully clients looking at specific stocks?
Yeah, I think that's right. Look, in the last decade, really, equities and all asset classes have been dominated by one thing and one thing only, and that's a zero interest rate world of very low cost of capital. And that's really driven an environment where valuations of assets have gone up. That's been a major driver of returns, which we're not likely to see again to the same degree. But it also generated an environment that was very factor-based. Everyone wanted growth because it benefited most from that backdrop of very low cost of capital, and everyone was neglecting value. And I think it's much more nuanced now. You're seeing some really good earnings coming through across different sectors of the markets, we're also seeing different leadership geographically as well. We've been arguing that Europe would outperform the US, and it's been doing rather better in the last year. I think that will continue. So I think investors need to be a bit more nuanced, more diversified across regions, across sectors and factors. And it really is, I think, an environment where stock picking and alpha creates a better opportunity for investors relative to just beta and index investing.
Well, that makes sort of a concern around the fragility of markets when there is a shock that people are not prepared for. And I wonder, for example, today with the CPI report, we end up with something that is much hotter than what people expected. If there is that vulnerability, even amid all of this sort of malaise around the macro trade, to suddenly say, oh my goodness.
Traff bra på den shortman da.
Yeah, I think, look, the macro is going to be critically important because we're close to inflection points, and it's always an environment where investors become particularly heightened to risks.
Her har den her kan man bounce ganske bra på et støtteområde her nå. På 15-8-9-7 støtteområdet her. Akkurat, det var det jeg sa. Så hva gjør Jones da? Jo, han shorter på nytt, faktisk. Because I know this game.
Markets are really pricing the best possible outcome. Bond markets pricing rate cuts and inflation coming down. The equity markets are pretty much pricing a soft landing. That combination is
Kunne like gjerne gått long her, men det gikk for fort for meg. Rett og slett gikk for fort.
Interest rate expectations need to adjust to being higher for longer to get inflation down.
Peter, before we get back to inflation here, I want to tag team you and Jeff Curry together, and this is on hydrocarbons. And I look at Shell PLC, obviously with a higher dividend than what I see with ExxonMobil. Goldman Sachs on owning big oil on the continent, big oil in America.
Da gjør du det, vet du.
Well, we like energy and commodities generally. We think that prices will rise from a fundamental perspective, as Jeff has been arguing. But also these sectors are very, very cash generative. They're paying dividends, and they've got free cash flow yields, in the mid-teens, particularly in Europe. So energy and resources were overweight in Europe. We like resources in particular in the US. But these areas of the market, we think, have very low valuations. They don't have a lot of downside risk in terms of valuation. And they've still got an opportunity to, I think, accrete returns and compound returns for investors over time in a flat market.
Peter, if you and Jeff Curry are ever in New York City, or we're there in London, whatever, we'd love to get both of you on desk with us at the same time. That would be just a really great moment.
Husk på, jeg var long i dag tidlig, vet du. Så nå tjener jeg penger.
I did get some enthusiasm there about energy, and again, everything I've heard the last couple of days is about where's the free cash flow. You can describe it however you want, but it's operating cash flow.
Visste at vi skulle i dag. Hadde en liten anelse. Og derfor jeg solgte masse for 3 dager siden.
Well, I mean, there's a lot left because where are people going to invest if they don't necessarily have the confidence that their projects are going to have long-standing power if people are investing in other things?
It's Inflation Wednesday, but Lisa, and you're the one that pointed this out to me, in so many things we're looking at, particularly...
Hvis jeg hadde fått til et bedre oppsett hvor man kan se alle posisjonene sånn ordentlig, tror jeg hadde slått an utlandet da. Hvis jeg hadde hatt sånn at man så pengene, liksom. Litt mer proff denne greia her. Jeg kan jo faen ikke data.
What are they going to do to get out of it?
We were talking with Katie Kaminsky yesterday, who's a trend follower, and we were saying, what's the signal? And she said, the signal is not a signal. We're not getting anything.
Men all fairness, jeg pisser på de guttene der borte som jeg sitter og ser på trade. Det er jo ikke i nærheten. Uten å være kjekkast, liksom.
Do you want to know another trend follower? John Henry, he owns a baseball team up in Boston as well. And it's
de har jævla mye følgere, da.
The trend is they're above the dreaded New York Yankees.
Ja, jeg vet ikke hvordan jeg skal markedsføre det. Jeg har ikke snøring.
Stay with us. It is Inflation Wednesday. Good morning.
Keeping you up to date with news from around the world with the first word. I'm Lisa Mateo.
Det er en der borte som gjør jævlig bra, som heter så mye som er ganske flink.
We'll get to that in just a bit. Right now, we want to
Han
get to
heter så mye
President
som
Biden and congressional Republicans. They made little progress toward averting a first ever.
Han heter så mye som
They did agree on another meeting Friday, which will again include House Speaker Kevin McCarthy. The president said he viewed the meeting.
Han gjør det veldig bra nå, da. Ricky Gutierrez. Ricky Gutierrez eller noe. Han har mange følgere. Lager noen shortfilm på at det går kraftig pluss mot det Ja. Jeg gjør det samme hver jævla dag. Det er liksom ikke... Det er ikke sånn at jeg har en grønn dag, og så 3 røde, 2 grønne, 4 røde. Jeg har stort sett hver jævla dag. På nesten alle transaksjonene. Former banker Lee Yunzi will be party secretary of the newly formed National Financial Supervision and Management. Så jeg er ikke redd for å ta tap heller, liksom. Det er mange som trader som ikke tør å vise tap, de viser bare gevinstene. Det blir så feil. Når du skal vise det live, ikke sant, så blir det bare oi, en dårlig dag. Litt av trikset er å ta tap. Og så kan jeg fortelle hvorfor litt senere, hvorfor jeg ikke legger inn en automatisk stopplås på scalping. Kan dere gjette på hvorfor ikke jeg gjør det? Det beste du kan gjøre å si ting rett ut og være ærlig. Jeg er verdens beste etter om du vil lære meg å bli fremme. Jeg er litt klyst å si det da. Jeg er nok ikke verdens beste, men jeg er blant det beste. Og snart så kommer det ut hvem jeg har vært trader for også. Jeg skal ha lov til å si det. Jeg er litt nervøs for å si det. Jeg hadde lyst til å si det mange ganger, men jeg er livredd for å bli saksøkt av han som jeg var det for. Plutselig så bare da blir det sånn nytt Hegnar-krig. Det tør jeg ikke gjøre. Jo, for at jeg sier hvem som har vært kundene mine. Jeg har tradet for de største gutta i Norge, liksom. Jeg kan si det, men jeg kan ikke si hvem det er. Hadde jeg sagt hvem det er, så tror jeg jeg hadde blow up mye mer. Hvis jeg hadde sagt hvem det er. Hallo! Hei! Nei, jeg har vært i Tønsberg, så jeg har tradet hver eneste dag, så jeg har vært jævlig opptatt, men jeg er hjemme nå, liksom. Jeg er hjemme nå, liksom, så jeg er hjemme nå. Jeg er hjemme ut hele uka. Hva? Hente hva? Ja, ok, bare kom litt opp. Ok, ha det.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg.
Kapital 24 var dritbra navn, da. Jeg kan ha ment at han eide det navnet, liksom. Helt idiot. Nei, det faen ikke navnet han. Det som er sjukt, det er at Trygve Hegnar har lov til å handle aksjer og trade aksjer. Det synes jeg er sjukt. At han kan i det hele tatt kjøpe aksjer. Det synes jeg er helt vilt. Jeg skjønner ikke at det er lov. Han kan lage en artikkel, han kan liksom bare, nå kjøper vi litt norske skog. Og så bare kommer det 2 uker etterpå, eller 3 dager etterpå. Norske skog ser kjempebra ut. Industrien øker. Kontraktene ramler inn. Kineserne bruker mer doruller. Det kan han finne på øret, liksom. Og det er helt greit. Hvis jeg skal meldes artiklene om andre at han har aksjer, det er flink til å liksom. Jo, men det er ganske sjukt at han har lov til å gjøre det. Altså, jeg hadde gjort akkurat det samme selv. Hadde jeg hatt muligheten til å påvirke en aksje sånn som han kan, så er det jo akkurat det samme selv. Men jeg bare synes det er rart.
Lisa, that I missed the meeting. I mean, I wasn't like sitting
Jo, men har vi noen influensere I Norge, liksom? Har vi det? Jeg vet ikke om noen, Jeg sitter og ser på de der gutta på TikTok. Det jo ingen der som har noe snøring. Eneste som jeg ser har litt snøring, han der Christian Kleppe. Han der krypto... Hva han heter han? Hva kaller han sånn?
$72.72, and Lisa has noted the euro has staggered and plunged from 110 down to 109.50. It's crazy. Right now, to give you perspective on this foolishness, Greg Vallier, Chief U.S. Foolish Strategy at AGF
Kryptobasis. Han synes jeg har litt peiling på hva som skjer der ute.
I do think there's something different, Tom. Good morning. I think it's the militants in the House. There's at least 24 House Republicans who really don't want to raise the debt ceiling at all. You know, they may agree to the spending cuts we got two or 3 weeks ago, but if there's anything more or any watering down, I think they take a walk. So that the House is a different dynamic.
Why do they have power? I mean, you mentioned 24. That's 24 voices among 300 XX and 100 senators, I believe it is. Okay, fine, but why do they have so much power?
Well, McCarthy only has a 4 or 5 seat
majority.
They didn't do very well in the last election, so with a majority that thin, a tiny minority has a disproportionate influence.
Given the fact that it's a tiny majority, does Representative George Santos of Long Island, the New York region, does his indictment by the Department of Justice affect anything?
Not a lot. Frankly, what surprises me is that was a bigger news story than the debt ceiling. The Trump legal problems yesterday in New York was a huge story, but I think that one of the many surprising things about this debt default saga is that there's no real sense of urgency.
Well, part of this is because we've all seen this story before. I mean, we talked about this all of yesterday, that Washington's trying to get Wall Street interested so that they could use it as a pawn to basically go back to voters and say, we tried our hardest. I mean, it seems really circular. At what point do they just kind of have to bite the bullet, resolve the issue, or is it not going to get to that until there is a little bit more emotion?
Yeah.
They're
out for a lot of June and July. So with this kind of a vacation schedule, I don't think they have time to get a deal done.
Meanwhile, Janet Yellen reportedly called all of the executives, the corporate executives, and they lined up dutifully and said, please don't do this. This is really dumb. You're holding the economy hostage. What do you think is going to galvanize some sort of reaction, given that the rank and file, yes, you have the polarization on either side of whether you want to cut the budget significantly, whether you want to keep certain spending and pair others. That I understand. The bigger debate is, why does this have to be resolved in this kind of, Brink's Edge kind of issue? How is it going to end other than some sort of massive move like the 14th Amendment or something worse like a default?
You could have that. I think you need one more ingredient, and that is a lot of demagoguery on Social Security. I think that's going to be a big part of the dialogue in the next 2 or 3 weeks, that senior citizens might not get their benefits. I think that will certainly motivate a lot of politicians. But you're right. It may take something outside the box, like the 14th Amendment.
Den flinkeste jeg har sett noen gang han Tom, han dansken. Han jævla flink på indekser.
I agree with Mitch McConnell, but it's going to take a while.
So we get an extension. The canis moveth down the road.
Trader Tom.
You wrote in your morning note, it's something like autumn, or maybe
it's
the fiscal year, whatever. Why the theater? I mean, if we're going to get an extension, I don't understand why the...
Han kjører nesten Men han kjører på det meste nesten med breakouts da. Han tar ikke sånn hurtigskalper som vi har nå. Ja, men Fredelig, han trader med for moro skyld.
Times with the late great Pete Peterson. Where's the commission? Is that what comes out of the meeting Friday?
Jeg vil påstå Fredelig en av de dyktigste investorene vi har I Norge. Han også Torstein Tvenge. Torstein Tvenge pisser på omtrent det som ute, ass. Dere aner ikke hvor svær han ass. Han svær motherfucker.
So I mean, in both parties, but especially the Republican
Petter Stordalen er jo ikke i nærheten.
we've got to do something about spending.
Well, Greg, how many people are
Torstein
talking
Tving er
about
liksom,
where the spending comes from?
han
Right?
er
I mean, on
bestefar,
both
liksom.
sides, there's been
Han er.
spending, whether it's the Trump administration or the Biden
Skal vi
administration.
bli inspirert, så må du få med historien om Torstein Tvenge. Fytti helvete.
I think we're going to get in a deal eventually.
Og så har du Røkke også, men han driver jo ikke med samme greiene. Torstein Tvenge er en aksje- og eiendomsspekulant, liksom. Torstein Tvenge er rå. Han er faen meg konge, så jeg får ikke sagt.
There are the rough outlines of the deal that we'll get. It's just that this dance is going to take months and months probably to finally get resolved.
Greg Villiers, thank you so much for the brief this morning. With AGF Investments, folks, I can't say enough about Greg Villiers' morning note to get not the zeitgeist, but just the mood out there linking economics and
Det hvor mye han Røkke er god for.
political ballet of Washington. The ballet is happening in Tokyo. Our Anne-Marie Horton in conversation Friday with the Secretary of the Treasury. This at the G7 finance ministers meetings. The timing on this is interesting. We'll have team coverage at 3:30 a.m. on Bloomberg Surveillance. I'm kidding. But this will be on a Tokyo time frame. Horton had a tantrum and said it's got to be 3:30 in my afternoon. So, okay, that's what we're doing. From Tokyo, Janet Yellen as well. I've been to these meetings, Lisa, and there's a lot of body language, but there's also a conveying of the message, and you wonder what Yellen's message is going to be to Anne-Marie Horton.
Especially when there's a fraught international stage and there's a fraught domestic stage, and the idea that how much does that affect the international stature of the United States as she goes into these meetings. This is a time that is crucial to try to get support around Ukraine in order to keep going with the potential offensive. This is crucial with respect to getting a number of other deals, trade and otherwise. How do you do this if people are like, what's going on at home? Are you guys going to default?
Yeah, what's interesting about this is what Korea desires, what Japan desires, and yes, China, Taiwan, and that down the Pacific Rim.
Jeg synes Torstein er liksom spekulant og sånn da. Røkke er mer sånn industri... kan du så kalle det.
Did you see yesterday that Italy is walking away from its Belt and Road agreement, which is really you're killing it.
Kill it. Thank you.
Anytime. But this to me was really interesting because it was something that was U.S. representatives really pushed hard against. They're withdrawing after entering it in 2018-2019 area. But how much is this sort of again, the sort of polarization? China, Russia, Saudi Arabia, maybe.
I totally agree with you. And what's fascinating is this was done by a controversial prime minister in Italy.
Yes, it was.
So that, this is something that, I mean, we have to get Francine Laquata up here. She will explain it. But the answer is, it's a big deal. There's no question about that. The big deal here is in 2 hours. The inflation report of the United States of America. Michael McKee, of course, with the dynamics of service sector and goods sector inflation. The markets will move. Stay with us. On radio and television, this is Bloomberg Surveillance.
We had a long-standing presence here in Houston for the past, I would say, 20-some years, since the compact merger. We bought a piece of land, we started building this building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team meetings, customer meetings, and in general, collaboration.
With regards to the hybrid work model, do you see that as something that will persist longer term when the pandemic is long gone?
Yes, no question, this will persist.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Bloomberg Surveillance, good morning. Good morning, Global Wall Street. Thrilled you're with us. Good morning to all of you looking 2 hours out to an inflation report in America. Where we've seen inflation, well, maybe a gallon of gas under $4 a gallon in most of Manhattan. That's a good thing. $72.86 per barrel on American oil. Brent crude well under 80, 76.57. Part of the inflation dynamic that Mr. McKee will slice and dice here at 8:30.
Although I do think that core, and exactly because of that point, core will be that much more important, stripping out energy, stripping out food, some of those more volatile areas, because that's the sort of sticky area of services worlds that you are talking about.
Many years ago, I dived into the research on this. Good morning to Loretta Mester and the Cleveland Fed and the Kansas City Fed that have really led the way on this. I'd also give credit to Diane Swank School, the University of Michigan, where there's been a lot of academics on it. And the answer is there's 14 ways to choose to measure inflation, and none of them are any good. So you sort of pick your, as Bill Aaron would say, your second best choice for it. Mine has always been the Cleveland core number, which doesn't just take out oil, energy, whatever, but varies month to month on what it takes out. I'm not sure that's the best number, but that's the one I've used.
I love the way that you put that, because this really is the reality. It's sort of, pick your inflation data and then come up with your theory. And what we're seeing right now is a host of projections from Wall Street. Let's get you some of them. Goldman Sachs is at the top of the pack, estimating a 0.5% rise in the core CPI month over month. Yes, they did. B of A at the bottom, calling for 0.3%. Citi in the middle, seeing a print of 0.4%. And this is really the game.
Can I interrupt? If it's a $30 pop at whole paycheck for groceries, why am I looking at a difference between 0.5, 0.4, and 0.3? I'm getting killed at the grocery store.
We will duly note that, and we will send that to all economists and say that Tom Keene at Whole Paycheck is spending a lot on his Italian artichoke hearts, and he would like to remedy that situation. Veronica Clark, among them, lining up to weigh in, economist at Citigroup. Veronica, I'd love your thoughts, not necessarily on Whole Paycheck and Tom's grocery bill, but definitely on sort of the vagaries of today's report and why you're expecting it to come in hot.
Yeah, we are now on the median. It's a 0.4, so we're right in the middle there, but it's a strong 0.4, so expecting a 0.44 month-on-month increase in core CPI. And a lot of the details really do matter here. A lot of the inflation data, I think it gets a bit more nuanced now. We're really looking at those core non-shelter services in this report. So that's recreation services, education, communications, expecting those to still be pretty strong.
You have been particularly vociferous, Veronica, over at Citi, you and Andrew Hollenhorst, about the stickiness of inflation, the need for this Federal Reserve to go further, of the market's sort of closed eye approach to what the reality is, which is that rates are going to remain higher for longer. What gives you that conviction? What makes you think that in some ways you're going to be vindicated with today's data?
Yeah, it really does just come down to the stickiness of core services inflation. And that's the inflation that's worrying for the Fed because that's what's tied to very tight labor markets. And very low unemployment rate. Of course, we saw that on Friday, and strong wage growth. We saw that again on Friday too. If you don't see the labor market loosening, if you don't see wages slowing, there's really not a lot of reason to think that that underlying pace of inflation slows. That looks pretty consistently at around 5%. And I think that becomes more clear by the time of the June FOMC meeting. The Fed's latest forecasts look a bit too low for inflation, and they might have to raise those.
Veronica, let's do the Chapel Hill math right now, and that is you've got X number of inflation data points, and you establish a vector. I believe disinflation is the arrows pointing down. I definitely have a goods inflation, a vector telling me disinflation may be on a path to outright deflation. Which way does the vector on service sector inflation stand at 8:31 this morning?
Yeah, you make it sound a bit more complicated than it is, maybe. We're not really seeing true deflation in a lot of categories. We've seen that in energy, seen it starting maybe in food. And goods, prices have been softer, but those services prices are still very strong. We're not even, hoping for deflation. We're just hoping for a slower pace of inflation there.
I think it's a really important point, folks, as we model out rate cuts. Lisa's on top of the story 24/7. I could care less. But the answer is, I don't know how you model rate cuts if the arrow's going up on service sector inflation. How does real estate play in on that 7.1% service statistic?
Yeah. The shelter component of CPI is a bit more important here. We saw that starting to slow in March. And that should continue. We've seen home prices that have eased, new rents that are coming off, at least slowing, not rising as fast. And that should be reflected in that shelter component of CPI. That should continue. That will help things. But that is a really big component of CPI, but unfortunately, it's a smaller component of PCE inflation, which the Fed will target. So PCE inflation actually might not come down quite as fast because of that.
Veronica, but the banks, there's going to be banking stress, and that will bring all inflation down. I mean, basically, that's the narrative, right? It's basically people have been waiting for the credit cracks to worsen. People read you can do it, sluice. How do you pronounce it? Sluice?
The sluice, yeah.
Yes.
I read the whole thing.
Oh, I'm sure that's the reason why you were out yesterday, just working through it.
Recovering from it.
The Senior Loan Officer Opinion Survey showed really whatever you wanted to think of in terms of, yes, a bit of tightening, no crisis yet. From your vantage point, how does this factor into your call that it's not going to necessarily matter for the Fed when it comes to their fight on inflation?
Yeah, I mean, that tightening of credit, we've seen that for a while. It was a positive, sign that we didn't see it accelerating, too much more in the Q1 sluice. But that will impact activity, that will impact inflation. But that's really a, further out down the line type of impact now. It's a slower tightening of credit. Which is, a more positive thing. But in the meantime, inflation's coming in stronger than the Fed was forecasting in March when, presumably they included some of that drag from tighter credit. Unemployment rate is still very low. So things are still evolving, stronger than they would have expected.
I imagine you get a lot of calls pushing back, Veronica. What's the most convincing argument against what you are saying?
Yeah, I mean, certainly markets are not pricing further hikes like we're expecting. We're also not expecting cuts, which they're pricing. I think the best argument is, there are financial stability, concerns. The Fed could want to be more gradual. It doesn't need to, quickly raise rates anymore. Maybe it takes its time and wait and see how things evolve. But I think in the meantime, they're still focused on inflation. That has to be number one. And if inflation's looking, stronger than you were forecasting, well, then rates need to be higher too.
Veronica, if I have a Hollenhurst-Clark call, which is you may be on the edge of Bullard, where we do get a rate increase, maybe even, dare I say, a second rate increase, what does my Bloomberg Treasury and money market screen do? Do you guys frame out SOFR or LIBOR? Ira Jersey and I are arguing about this. He says SOFR, I say LIBOR. He says call the whole thing off. But the answer is if I'm looking at 3-month benchmarks, or dare I say the 3-month T-bill, do I need to start modeling out 6.00%?
I don't think we're going to see rates quite that high. But yeah, of course, we look at short-term rates, and we are in that Bullard camp where we think rates are getting to a bit above 5.5%, which is certainly not priced. And yeah, it could make some of these, deposit outflows, a little bit worse. We've seen that for a while. People can get higher rates in these, in T-bills and shorter term.
Å faen, ja, jeg sa jeg var borte.
And that can continue.
Jeg sa jeg var borte.
That's part of the, slowing of money going out into the economy that brings down inflation.
Veronica, thank you so much. Greatly appreciate it. Veronica Clark with Citigroup again with an important inflation call. I like, Lisa, how you frame that with Goldman Sachs. Hattie is pushing it up a little bit yesterday.
Takk på dere. Lykke til I møtet.
More quiet. I was making a joke about it, but there is seriously, folks, a big difference between a 0.5, 0.4, 0.3.
Well, it's also the trajectory, right? It's a month-over-month kind of figure, and the year-over-year trajectory, especially with some of the revisions, will make a big difference to understand which data we should pay attention to in all of these disparate points of information.
The 7-day SEC yield on a big fund company money market fund, let's check in at 4.98%. What does First Citizens do if it's a 5.48% yield after Veronica Clark beats it to death?
So we just did get First Citizens first quarter data, which is a little bit muddy just simply because they did buy Silicon Valley Bank. And so there's all of these acquisitions. And what you are seeing here is just a huge beat across the board. For example, they see deposits for the full year being $132 to $137 billion. The estimate was $119 billion, so far above expectations. They see a full year net interest income of $6.2 billion to $6.5 billion. The estimate, $4.02 billion, basically $4 billion. So a significant beat. How much is this simply because of what they acquired from Silicon Valley Bank? And how much does this sort of point to the winners and the losers in this whole kind of morass that's in the regional banking space?
On radio, we're showing the chart here right now where we get down to $5 per share agony, up to $8, and then up to $1,100, $1,200 on First Citizens. And what I would suggest is it's actually a technical breakout. You look at the trading envelopes and the other fancy Bloomberg technical stuff, and unlike a lot of these banks or the Keefe, Bruyette, and Woods Index, this actually has a real pop to it.
Well, it sort of reminds me of a story that came out yesterday that big banks are increasing their salaries substantially, increasing compensation for their bankers, for their workers quite significantly, and regional banks are having to cut workers and cut compensation. And there's a consolidation in the bigger firms. And I imagine that this is going to be happening in the regionals too. The bigger, more stable ones will be able to hire the bigger, better people, will be able to bring in the business, and you'll get that ongoing consolidation.
I'm looking at the chart of JP Morgan here quickly. I'll just describe it to you folks because it's Wednesday. And the answer is it's very indeterminate, our theme for the day. It's right smack dab in the middle of the trading envelope where something like First Citizens entrepreneurial has a certain lift to it.
But this isn't enough to have the all clear yet. That's what I find interesting. You don't necessarily see some sort of resurgence in the KBW index on the heels of a positive story. People are looking for the negative news. They want the crisis. They don't want the sense of relief. And that I find interesting. I mean, there is a bias here to look for the bad news and then see the good news and shrug it off and say, just wait. And I think that that's a notable trend.
I expect that from a woman who, the New York Mets have lost 6 out of the last 7 games. So, I can understand the caution, the reticence.
Okay, go ahead. Where were you yesterday? Let's talk about it. How amazing your team is. How it was so much fun. Go for it.
The Red Sox, I enjoyed Boston yesterday, and thank you to the Boston Red Sox for really just very, it was actually very emotional. I was sort of shocked, going back to my ute. But the answer is all that matters is they're doing better than the dreaded New York Yankees. Really, Lisa, nothing else matters. That's all
is somewhere where I can get on the same page with you on that one. Just as a
so
there you go.
Headline: Bramo and Keene on the same page. It's just too much. It must be inflation Wednesday. Futures at -7. Stay with us for this important 8:30 report. This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. After making little
Du har hatt flere emisjoner og splitninger på den kursen, så du kan ikke helt sammenligne det.
We'll head back to the drawing board on Friday for another meeting to try and avert a U.S. default. President Biden calls Tuesday's hour-long conversation productive, but House Speaker Kevin McCarthy said he didn't see any movement. The U.S. has announced a $1.2 billion package to bolster Ukraine's air defenses and ammunition stocks. The aid also includes satellite imagery services and equipment to integrate Western systems. The word came after Russia's President Vladimir Putin vowed to press on to victory in the war. Wages are rising fast across England and are finally catching up to inflation. Pay rose 10% in the past year for those taking new jobs. That's according to data posted to Reed Recruitment's platform. Figures point to a labor market that remains red hot. They cast double doubt on Prime Minister Rishi Sunak's vow to cut inflation in half this year. In China, Xi Jinping's latest crackdown is
Xi Jinping, Xi Jinping.
foreign hedge funds and CEOs. It's threatening the attempts of the government to lure foreign capital into an economy showing increasing signs of strain. On Tuesday, Chinese authorities targeted Cat Vision Pro, accusing the global expert network of leaking state secrets and being linked to foreign intelligence. And billionaire Steve Schwartzman has met with Florida Governor Ron DeSantis, but the meeting left him unconvinced of the Republicans' White House prospects. Bloomberg's learned that, for now, Schwartzman will hold off donating money to DeSantis. He's currently not supporting anyone in the Republican field. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
The top names in climate change are on Bloomberg.
I want everybody committed to the kind of action that we need. We have a global emergency now. You know, we're still putting 162 million tons of man-made global warming pollution into the sky every day, using the sky as an open sewer. That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan underwater. That's why we have the historic heat wave in China. Nothing comparable to that ever. That's why the heat records are broken every year. And we're seeing an increase in the flows of climate refugees crossing international borders that are due to vastly expand unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stenevec bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all
Hvor 4 går, jeg aner ikke, ass.
Bloomberg Radio, and streaming on YouTube and Bloomberg Originals.
Hi, I'm Francine Lacroix. Join me on Leaders with Lacroix as we explore what drives the most influential people on the planet. Leaders with Lacroix on Bloomberg Television, TV Go, and Bloomberg.com.
Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 1 p.m. Eastern, right here on Bloomberg, your global business authority.
Sometimes people get excited about the credit tightening. It's going to be a credit crunch. Not really. And the reason being, banks are in the business to lend, as we all know. And now they risk adjust that lending, and they may charge more for loans today, but they're not packing up their bags and not lending.
Gerard Cassidy's, what a great set we've had with the sell-side research here on this banking crisis with RBC Capital Markets. I keep wanting to say Tucker Anthony and RL Day, but that will show my age, to say the least. Gerard Cassidy there on the banks this morning. Futures at -7, Dow futures at -52. Really waiting for an inflation report. Lisa, we measure this, folks, by the red and green blinky of the screen. Like if I cross my eyes, you can get a feel for the market. There's nothing going on. We're just, that's all there is to it.
There have been some stories, some analysts coming out trying to project if it's above 5.9% year-over-year core, then you could get a 3% decline in stocks. And if it's below 5.2%, you look so impressed right now, you could get some sort of pop, but that's really where we are, which is the reason why you're seeing that blinky.
It's interesting to see. What we're going to do is continue this discussion right now, dive into it with someone with some real important finance background, including working in financial control at Morgan Stanley years ago. Christopher McGrady was at Villanova. He batted .364 his freshman year as he staggered up the infield to shortstop, and massive Northeast guidance, I should say, in baseball. Brought it over to securities research, and he joins us now, head of U.S. Bank Research at KBW. Okay, these banks are the New York Yankees. They're in last place. Everything's going wrong. You and your cohorts predicted, okay, it's all over with FRC. That's great. Now they're going to lift. And you're still in last place like the New York Yankees. When do the banks lift up to the extremes of the Tampa Bay Lightning? Tampa Bay Rays, I should say.
Let's check those stats on the batting average offline. I mean, right now the sentiment is just really terrible. Fundamentals came into the year pretty strong. But we knew earnings had peaked. And really what we've seen over the last 3 or 4 months is that acceleration to the downside of earnings estimates, and that's shaken investor confidence. And you've seen these 3 large bank failures really just shake confidence of investors.
The heart of Keefe, Bruyette & Woods, led by Tom Michaud, is just simple. You people have your ear to the banks like nobody else, with great credit to Sandler O'Neill, your arch competitors, over the years. Great. What do these officers do to convey their exposure in commercial real estate? What does a CFO or a CEO do at 4,000 banks to say, hey, here's where we are in apartment buildings?
Sure. The numbers, we just saw the first quarter numbers. Numbers look great. Credit numbers look very strong. Now, the commercial real estate cycle will take time.
CPI-tallene, altså de viktigste tallene kommer klokka 2.
That's fairly manageable on these banks' balance sheets, 3, 4, 5%.
Så har tradet veldig bra I dag. Akkurat nå ligger jeg short på nytt.
So those losses will be offset. The banks will remain profitable. Dividends will be maintained. But
Ja,
certainly this is
14,30 da.
another component
Ok, da det enda bedre.
Well, just to build on that, there's a feeling that because of a portfolio of assets that they can't sell without locking in losses.
Jeg har gått long og short hele dag, men nå det siste jeg har gått short.
It wasn't really borne out in the recent SLOOS, the Senior Loan Officer Opinion Survey, but anecdotally, do you hear that they are tightening much more significantly and frankly just much less willing to lend than they were even 3 months ago?
Yeah, they're being more selective, right? Interest rates have gone up dramatically, so there is stress on some of the borrowers. But regional banks are lending to their good customers. They're being more selective, right? The price of deposits has risen considerably over the last year, and the balance sheet liquidity situation is paramount. So they're being more selective, but they are lending. Loan growth has decelerated. It's gone from, call it 10% in 2021 to probably 3-4%. There's a downward bias to that. The Senior Loan Officer Survey, to your point, suggested that there's more deflationary pressures.
But do you really get the sense that anything could break the bearish sentiment at a time when this is no longer a question of deposit security and now a question of profitability that just seems completely hampered for the foreseeable future?
It's about confidence. Banking is about confidence, and right now the confidence is pretty low. The earnings estimates, we can deal with negative earnings revisions. We can deal with declining valuations, but right now we're talking about systemic risk, right? It's a very fragile system. There are some things that can be done. We can talk about the FDIC insurance coverage. We can talk about the Fed pause. Those will, I think, be important components to restoring confidence. But clearly, right now, it's pretty fragile.
So right now, we're getting some reports. Reuters reporting that U.S. prosecutors are looking into short seller activity in bank shares. Mm-hmm. Do you blame this?
I mean, short selling is an important part of efficient markets. We saw in 2008 they temporarily banned short selling. That created a squeeze in some stocks, but ultimately it didn't solve the problem. We need full, free-flowing markets. But certainly there's been some unusual activity in some of the options that have been trading some of my companies last week. But certainly that's something we're going to look at.
I look at the technical damage, and I know you're not doing the technicals of the BKX index, and everyone watching this show, even internationally, sits on the Keefe, Bruyette & Woods index is the benchmark. The damage is so great, we have to all adjust our x-axis to recovery. What's your x-axis, your timeline of recovery in this shattered index? Is it 2 quarters? Dare I say 2 years?
It's felt like a long time, but it's been 8 weeks, 8-9 weeks since SVB. Last week we thought was going to be that T0 where
short no.
First Republic. That was an orderly resolution. We thought that would be kind of a catalyst to get back to normalcy.
That didn't happen.
Didn't happen. And I think what we saw this morning, First Citizens had good earnings. We've seen idiosyncratic companies like New York Community, these companies that are helping to solve some of the problems. Investors are hanging on to those stories, but it's going to take time.
Are you going to be out of a job in 5 years? How many banks do we go from 4,000 down to what?
Yeah, I hope not.
5 years out. I mean, seriously, do we go down to 3,500 or do we go down to 35?
I think it's somewhere in between. I mean, the math suggests you lose about 4% of the banks traditionally every year, so that's a couple hundred. I would suggest that what's happened over the last 2 months is going to accelerate consolidation. Once you know what the rules are, and we're learning the rules from a regulatory perspective, that we need more banks, we need more regional banks to compete with the top four. That should accelerate consolidation. But to your point, there are going to be fewer banks. The United States has the most banks in the entire world.
What will it take for sentiment to go up? What will it take for you to recommend all in that you actually see this as a screaming buy?
If we can get back to looking at these companies on fundamentals in the market, looking at fundamentals and not fear, that's the key to me.
So I'm in Washington. I'm walking down a sidewalk. A guy stops me, love your show, blah, blah, blah. You had the guy on from KBW, and you're talking about Middlebury and D1 hockey. Have you explained to him or showed Middlebury needs D1 hockey like Villanova has D1 hockey? I mean, it's like a no-brainer, right?
It seems like
it's like un-American that Middlebury is in D1 hockey, right?
That's right.
Okay, there we go. You heard it from McGrady, Chris McGrady. Thank you so much for confirming that. He's with KBW in banking, and really we thank our team for this terrific coverage you had from Ken Lyons and Ken Leon, I should say, and Gerard Cassidy and others. I mean, I agree. I thought there'd be a little bit of a recovery, and it was 4, 5, 6 days, BKX.
People are looking for a boogeyman. That is what we have seen pretty much consistently. They're expecting something to break, and they're saying regionals is a place that is going to happen.
Is it work from home?
It's just, you mean in terms of the boogeyman?
Just in general, yeah. I mean, just, we're back to 49% in New York City, I guess, of back to the office, but that doesn't help commercial real estate, does it?
You think that people are just sort of sitting at home and worrying and fretting. You know, there are some of these monumental shifts in the economy that people can't get their hand around. And I think that with respect to regional banks, there is a question around profitability. There is a question about competitiveness with respect to getting deposits. It's just a ball of angst that's leading people without a sense of exactly what's under the hood, and frankly, a lack of confidence in regulators to really give a sense that they have a handle on this.
I'll go with the confidence, but I would also go to scale, this dreaded word scale, in that if we say each and every bank, except for the big ones, is going to be a smaller institution, you have to spread your technology expense, your labor expense, all the other, fixed costs that you have across a smaller banking platform. And I think that's hard. Let's do a brief here on inflation here at 8:30 this morning. Lisa's been looking at core and non-core, and there's a bit of a difference here. You're focused on core inflation at 8:30, aren't you?
Well, it increased month over month, the prior month. So do we see that kind of increase as well at a time when a lot of people are saying services sector side is just continuing to chart some pretty hot gains, particularly led by the airline sector?
You know what I'm going to look at?
You're going to look at Red Sox tickets.
No, real wages, 2 years, negative real wage. It has been 2 full years, this inflation report, that we have seen inflation-adjusted negative weekly earnings. I find that I can't even frame that, how painful that is.
This is the reason why inflation is the number one fight for the Federal Reserve, because it affects people and essentially it puts less money in people's pockets to get out there and actually live their lives.
Part of what we're going to do at 8:30, it's in 90 minutes, we'll do that with Michael McKee. The VIX exactly 18.00, 2-year yield 4.05%. That's a nice adjustment there over the last number of days. Kurt, 210 spread, the vanilla spread, 55 basis points, not doing much. The real yield, 1.26%. Stay with us. This is Bloomberg Surveillance.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services, and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive, and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
I'm going to name a couple of your babies. I don't know if I'm asking you to choose amongst your children, but some of the most recognizable buildings by you, of course, the Millennium Bridge, London City Hall, the Reichstag, and the Great Court British Museum. What was your favorite project to do?
the Reichstag does stand out because, first of all, it's an energy manifesto. So it transformed something that was dependent on fossil fuels. It uses all the technology to produce something which is essentially carbon neutral. And as a public building, that's a statement. It's a symbol of a city, it's a symbol of a nation. It incorporates works of art. It's recycling an existing building, which, as I mentioned earlier, is the ultimate in sustainability. If you can give a new life to a building, it also creates public space at the roof level. It's the most visited parliament in the world, so it puts the public above the politicians who are answerable to them. And that, of course, was made possible by the politicians. So it's a demonstration of democracy in action.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people,
There's no question this industry is composed of some bad actors and some good actors.
the transactions,
Volumes have surpassed $24 billion per day.
and the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays. From the world of politics to the world of business. Every weekday at 5 p.m. Eastern Time, hosts Anne-Marie Hordern and Joe Matthew alongside Kaylee Lines deliver news, insight, and analysis live from Bloomberg's Washington headquarters. Get the latest from and about politics' biggest power players at the end of every trading day. Balance of Power, every weekday at 5 p.m. Eastern Time, only on Bloomberg, your global business authority.
We have to remember, with rates being higher, it's more costly for people to borrow.
Our best guess continues to be that there are some earnings disappointments out there.
Part of the reason we have a challenge right now is the equity market is way ahead of itself.
It's one of those environments where the market is heavily biased towards pricing in a recession.
The consensus right now is expecting a recession to start really in this quarter. It just doesn't seem like that's going to happen.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
Good morning, everyone. Jonathan Farrow, Lisa Abramowitz, and Tom Keene. Inflation Wednesday. We're going to have that for you here in 1 hour and 30 minutes. Really nothing else matters. A report on the agony we've all faced in inflation. Services is good. You know, we make jokes about it. We do our bow tie economic babble, the Bramall gloom. Every single viewer and listener has been slammed by this inflation.
And in specific pockets as well, especially if they want to travel, especially if they want to eat out, especially if they want to engage on any service level whatsoever. We talked with Elaine Becker yesterday about the airline industry. Double-digit increases 1 month after another in terms of how much those prices have gone up.
I mean, John has a Gulfstream, and so there was, you know, a DCA trying to get back. In the 3 flights before mine, every seat was taken. Every single seat.
It's demand and it's supply. And you've been talking about this, and frankly, there are these distortions that continue to have some effect, which is...
In a lot of industries.
Right, in a lot of industries, particularly in some of the service side issues. How does this dovetail into a broader economic call? When you're pointing out, Tom, there are all these different inflationary data points that give the tea leaves to a very different narrative. How do you get a read on this one? And it's going to be under the hood, parsing out the details.
And even if we get a 7.1% service sector statistic today, a leveling of service sector, not a disinflation of service sector, the fear that's back there is what John Farrow's lived with his family in England or on the continent of Europe, what Maria Tadeo's living in Brussels, which is a substantially higher inflation. All of a sudden it's like, oops, are we a little bit like them?
Right. And
That's out there.
At this point, if you take a look at some of the market pricing, you don't see runaway inflation expectations. And this is giving the Fed some comfort to say, even yesterday we heard from Jefferson and Williams, basically inflation is starting to come down. That said, how quickly? Is it going to just naturally come down to something normal, or are we back to a normal that is a very different era?
I mentioned this at the end of the hour. Let's do it again. And what we do is we inflation adjust wages. And Lisa, there's lots of ways of looking at it. I do like the ECI statistics, which is wages and benefits. But under weekly earnings, which is something, I like the weekly idea versus the hour to hour. 2 years of inflation adjusted wages that are down, they're negative, and that's the social cost of what we're looking at.
I'm glad you bring that up. We keep talking about the pernicious effects of higher unemployment, and that if that starts going, it will get going and it will leave a lot of people without a job. If we keep in this moment, this kind of inflationary environment, a lot of people are also experiencing real declines in their incomes, which has a real effect. So how do you parse this out? And that really is going to parse into the Fed call.
Wonderful guest here coming up. Mario Gabelli in the next hour is as well. We're going to get right to it with negative non-farm payrolls. First, a quick data check. Really quiet on the screen. Equities futures -7, the VIX 17.98. I mentioned a lift in oil the last couple days, bouncing off 7.0 on West Texas Intermediate 72.87. In the yield space, back about 4%, 4.05%, 2-year 3.50%, 10-year dollar not giving me much, euro moving away from the Bramo 110 to a weaker 109.52. We need a Wednesday brief.
It is 8:30 a.m. It is all about that figure that comes out in about 90 minutes time. Here in the U.S., the CPI report, we're going to be looking at core in particular, which has remained somewhat sticky. If it does come down, does it come down as much as people are expecting? Or does it stay sticky at a time of great uncertainty? And how does the banking story fit into that? We did just get First Citizens results. They came in well better than expected, but as we were just hearing from Chris
Nå henger PC-en seg igjen. Må jeg restarte igjen da? Så jeg får ikke trykket på.
Sphere, and that's what you have seen with that KBW Regional Banking Index not recovering from the lowest level since the pandemic.
Off the pandemic, for those of you on radio, I mean, obviously down you go February of 2020, and you come up and you got a nice post-pandemic lift and then flatness. And I'm sorry, to me, that's the most emotional chart out there right now, how close we are to banking being priced at maximum pandemic fear.
And this is the main pushback against looking at backward-looking inflation reads as the current condition for credit, with a time when Torsten Slok of Apollo just put out a note about bank credit conditions at 2008 levels. Aftermarket Disney reporting and just getting a sense of the consumer spending, also with respect to just the streaming content versus the cable news, how they're doing on that, and then the experiences, which we know have been an incredible boom as everybody tries to get back and live.
Are you guys like riveted to Mandalorian?
No,
I mean, I'm trying. It's sort of like Succession. I hear from a lot of people. They're like, it's just not the same.
Well, we'll find out with the advertisement, et cetera. I'll be honest, I can't watch anything after a certain hour without falling asleep. Maybe I'm just revealing a little bit too much about myself and my schedule, but there we are.
Here's the banner, folks. Wait 10 years, Brando. Joining us now, someone who's wide awake. David Kelly really made a splash the last time he was on with us. He's Chief Global Strategist, JP Morgan Asset Management. David, I've got to redo the stunning comment you made the last time you were on. You're looking for negative non-farm payroll statistics somewhere out there. After the jobs report, do you calibrate that we could actually see non-farm payrolls at some point give way to a negative statistic?
Well, yeah, I think that's coming. I mean, yes, it was a good headline number for the month of April, but they revised down the prior 2 months by 149,000. So if you look at it on a 3-month moving average, it's actually still falling. It's still fine at 220,000 right now, and that's because of a lot of pent-up demand for workers coming out of last year. But as this year goes on, as we go to August, September, October, I think the danger of a negative payroll read is high. And I think that will change people's perceptions on where the economy actually is.
The heritage of economics at the University College Dublin is to study like crazy the wage dynamics of the United Kingdom and Ireland through the Depression and on into the modern age. And the answer is all of it was accompanied by pressure on labor, pressure on wages, the labor share. When you see 2 years of a negative real wage, what is the cost of that to our listeners and viewers?
Well, it's significant, but I think we should look at this the other way around. You're talking about how services inflation is still high, core services. Well, core services is made up of really two things.
Har du et gevinst
It's
nå?
all about owner's equivalent rent, which is kind of a
Gevinst.
mythical figure altogether because it's the rent you would
Fan, det
pay
henger
if
så
you're
her.
renting, except in fact you own.
Gevinst.
That's about 25% of CPI. And then you talked about airline fares,
Topp,
hotel
de der
rates,
oppe.
and I
Jeg
think
shorta
that's
dobbelt her
the
oppe.
high
Topp gevinst
experience
på de nå.
in
Ligger jeg
the
short
business
der,
model, but
der,
to be honest,
der.
that's not the biggest problem for the average American. The average
Og
American, their biggest
helt der
problem is
nede.
food and energy. And of course, actual rents. Now, actual rents have stopped rising. Food and energy prices have stopped rising. They're high.
Because I'm
but they haven't
crazy.
stopped rising. So really what Americans in general need is a wage increase. So when I see the Federal Reserve all worried about, oh, wage growth is too strong. No. You actually want wage growth to be a bit strong here to try and level the playing field a bit. So I don't think there's anything wrong with a little bit of wage growth here. What's really, what's unfortunate is that real wages have been pushed down because workers are actually pretty much on the defensive here.
David Kelly channeling the senator from Massachusetts. I believe I just observed that.
All things being equal, if people think that it's not necessarily the main driver of inflation, it should be a positive for the economy. But David, what would you have to see either in this report or elsewhere to change your view, which is right now what the market believes, that the Fed is going to turn around and cut rates because there is going to be this incredible disinflation?
It would take a lot to change my view because we look at all the little pieces of inflation. We have to forecast this number and it's a bear to forecast it. So we look at all the little pieces and what we see is this pressure coming off energy prices globally, food price inflation in pipeline. I think it looks like disinflation. We're not, and we've got all these worries about potential recession, which I think is keeping down inflation elsewhere. So I see the economy gradually normalizing here. And our numbers say, okay, so today it's going to be about 5% year over year, not much change from last month. But a year ago in May, inflation was 0.9. In June it was 1.2%. And when you back those numbers out, that means that the CPI headline inflation rate will be below 4% by June. We're pretty confident. We think it's going to be about a 3.8, 3.7 by June, and then it'll sort of flatline, and then it'll come down all the way through 2024 as shelter goes the other way. So we're modeling all the pieces of this, and it would take a lot and it's really been tracking very close to our models, throughout the last year, even though it peaked at a very high number. So it would take a lot to convince us that we're on the wrong path here.
The problem that I've faced, and please correct me if I'm wrong, when I feel like people don't have a sense and they're sort of throwing darts at a dartboard, because if you take a look at, for example, the Bloomberg U.S. Economic Surprise Index, it is at its highest level in more than a year. People have been getting wrong to the downside economic projections and have been surprised to the upside again and again and again. What's to say that's not suggesting that people aren't tracking the right things, that they're looking in the wrong places to really understand where the movement in this economy is?
Well, it is a complicated economy, and I think it's very wrong to use a rule book from the 1970s to try and figure out U.S. inflation dynamics. I think the story is completely different. One of the things that's been going on so far this spring is, first of all, we've got different seasonal patterns after the pandemic, and because of sort of the evolution of the economy. I think that's helping payroll job growth early on in the year. We also saw big cost of living adjustments because of the lagged effect of that. That's all having an effect. Right. We've also got pent-up demand for autos, and that's having an effect. So I agree with the notion that we're not going to be a recession in the second quarter. There's plenty of reason to see downward momentum in the economy as the year goes on, and particularly we're seeing downward momentum in underlying inflation dynamics.
David, I've literally got 20 seconds. On stagflation, you just don't buy it, do you? Stagflation is yesterday's story?
No, it sounds like a New York Daily News headline. I mean, it sounds scary, but the truth is it's really inflation stag. You get the inflation first, then the Federal Reserve overreacts, you end up with stagnation. And what I'm worried about is that may be exactly where we're headed.
David Kelly, thank you so much. Greatly appreciate it. With JP Morgan Asset Management, really can't convey the value we've seen from Dr. Kelly here the last number of visits. You know, you put this view together. I'm not saying I agree with David Kelly, but
Nå går det så treigt på min PC her, altså. Jeg shorta på nytt der oppe. Shorta på nytt der. Ta gevinst nå. Faen, jeg rekker jo ikke trykke ut posisjonen mine. Det går så treigt.
David Kelly is more consensus that a lot of people who are calling for inflation to be a lot stickier.
Er det noen som har peiling på PC her, eller? Jeg får jo ikke gått... Det var jo ikke sånn i går.
This is Bloomberg Surveillance.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. President Biden and congressional
Når jeg trykker nå, så bare loader den. Jeg kommer liksom ikke...
US default. They did agree on another meeting.
Og så når jeg går ut inn, så henger den seg.
House Speaker Kevin McCarthy. The president said
Og nå
he
funker
viewed
den
the
da.
meeting on raising the debt limit as productive. Bloomberg's learned New York Republican
Så det trakk
Congressman
seg.
George Santos has been indicted on federal charges. He's been under investigation over possible campaign finance violations. Santos took office despite fabricating
Men lyden bra da.
about his education and career. Former President
Ta gevinst nå på den jeg nettopp tok. Nå trykker jeg nå sånn nå. Nå. Så laster den. Jeg får ikke solgt. Ikke enda. Ikke enda. Ikke enda.
It's the first verdict against him.
Ikke enda. Nå. Jeg brukte 5 sekunder på å selge. Rens catch for crown og går track minst av lysen charter. Ligger rense catch. Jeg kan ikke trade så tregt. Jeg slår PC-en i stad, for den var sånn treg i stad, og så funket den bra igjen, og nå er den drittreg igjen.
Most economists figure the ECB will raise its key interest rate twice more in June and July. Shares of Airbnb are falling. The vacation home rental company gave a cautious forecast for revenue in the second quarter.
Check task man.
Airbnb suggested that rising prices and a murky economic outlook are starting to affect consumer appetite for trips. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Det går så tregt her nå. Skjønner dere noe av det der? Ingen skjønte noe av den der. Jeg skjønner ikke noe av den dritten her. Jeg trykket på prosessor. Den er drittreg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. Golf's popularity is surging. That's been great for the LPGA. And CFO Kathy Milthorpe is focused on maintaining that drive.
The ability to be able to compete at the highest level and earn purses that are commensurate with their male counterparts is a mission that we're driving towards every day.
Watch Chief Future Officer today on Bloomberg.
GPU.
Welcome back to Bloomberg Daybreak Europe.
Good morning, good morning. This is Bloomberg.
Ytelse.
Welcome to Bloomberg Markets, trying to open.
This is Bloomberg Technology.
And welcome to Balance of Power. This is Bloomberg. Tomorrow, Bloomberg continues its coverage of the JP Morgan Global Markets Conference in Paris with an exclusive interview with JP Morgan CEO Jamie Dimon in the wake of the bank's purchase of First Republic. Join Francine Lacroix at 8:15 a.m. Eastern as they discuss the banking crisis, taming inflation, jobs, and more. It's all happening live on Bloomberg Television and Radio, your global business authority.
Everybody in this meeting reiterated the positions they were at. I didn't see any new movement.
Så det er ikke krise her, liksom?
Staff should get back together. We explicitly asked Speaker McCarthy, would he take default off the table? He refused.
The United States is not going to default. It never has. and it never will.
Boom.
I have been considering
Okay.
the 14th Amendment, but the problem is it would have to be litigated. And in the meantime, without an extension, it would still end up in the same place.
The great and worthy in Washington, an anticipated meeting of the President of the United States with legislatures yesterday over the debt and deficit of our nation. Pretty much on script. Lisa, do we agree on that? It just sort of pretty much went on script.
Everybody knew that there was going to be very little progress told outward. Some people saying it's
Right.
progress, that they came up with another meeting. They're meeting. That's what we know.
So what the value add is we can have another boring discussion on the debt and the deficit. As I said out on Twitter the other day, read Heilbronner and Bernstein from 40 years ago. They wrote the monograph on this of the linking of the capitalist system, and the debt was a constructive part of capitalism. But part of it, and over all of this, is maybe a morality on debt, which is a huge part of the national discussion or non-discussion. Romans from the Bible, let no debt remain outstanding except the outstanding debt to love one another. Joining us now, French Hill of Arkansas. He is a Republican. Give me the morality here, Congressman Hill. It is a serious, serious issue no one's talking about. Is it immoral to have a debt and deficit in the United States?
I think it's, well, first of all, good morning to both of you. I missed Bible study this morning, so that was a great top of the show reminder. And let me say that it is immoral to have a debt and a deficit that are not controlled, and that's what we have now. We're running a forecast of over $1.5 trillion deficits a year for the next 10 years in the president's budget. That's the part that's unsustainable. You could argue that's immoral because it's substantially larger than we've run in the past, and it doesn't show the kind of discipline we should have to go back to a balanced budget and not be adding to the debt indiscriminately.
Congressman, there is a photograph of you and Bush the First in your youth, and that was back when we had commissions, I think of Greenspan and Social Security, that actually got something done. I'm still in disbelief that Simpson Bowles went down in flames. Why can't we be like any good democracy, get a commission to find an equal ground to do something about our debt and deficit?
Well, Tom, you're right, and I do support that idea. I thought that was one of the more effective things in the first term of President Reagan when he was cutting taxes and rebuilding defense. He also put Social Security on a stable ground by the Greenspan Commission, which had an up or down vote on how to do that. I would support a commission like that to tackle mandatory spending programs like Social Security, Medicare, make sure they have the stability and funding for the next generation, because they're 2/3 of our spending every year. They drive the deficit, which in turn obviously drives the debt.
Congressman, there's a really important conversation to be had about what's sustainable and good finance for this nation. There's another question around the manner to have it, whether we should be having it on a brink's edge, holding the U.S.'s credit rating hostage. Is this really the appropriate way to be discussing this at a time when both parties have increased the deficit?
Right. Well, I think that's why on February 1st, Kevin McCarthy met with the president and said, let's meet and have a sensible and responsible way to raise the debt ceiling and get spending under control following the pandemic. They had a meeting. The president promised to follow up, and 100 days have gone by. And what's happened in the interim is only one branch of government, one portion of a branch of government has taken action, and that's the House under Kevin McCarthy's leadership to raise the debt ceiling and propose some spending controls and regulatory policies that would make us have a better economy and a faster growing economy.
With all due respect, under former President Trump's administration, the deficit rose by $7.8 trillion. It brought it to World War II type financing conditions. And yet we didn't have a question over the debt ceiling. There wasn't this sort of pushback. We weren't brought to the brink. Why is it so different now that we can't have a discussion more clearly, even though we have the same kind of debt situation?
Well, I don't think that's true. First of all, the bulk of that spending was due to bipartisan spending to fight the pandemic, over $5 trillion. Shocking situation, shocking reaction by the Congress. If we knew what we know today, back in March of 2020, we probably wouldn't have spent that much money. But with that said, we did have a debt ceiling fight in 2019. And it was President Trump was forced to negotiate with Speaker Pelosi because he was not in control of the situation. That President Biden finds himself now, and that's why Kevin McCarthy went to the president on February 1st and said, let's do a sensible and responsible deal.
Congressman, what would your response be to President Trump if he did invoke the 14th Amendment to keep paying interest, to keep paying principal on the U.S. debt, even if we do go over that deadline with respect to this debt ceiling?
Well, Secretary Yellen doesn't believe that's a practical activity. I think it's sort of a gimmick. I understand the 14th Amendment, but we've also got legislation in the House that we've passed to continue spending the principal and interest payments on the Treasury and other mandatory spending programs as well. That was passed by the House Ways and Means Committee several weeks ago.
French Hill, September of 2015, Mr. Boehner fell on a sword and exited stage right, or maybe exited stage left, and that was the problem with the Tea Party at the time. Explain to me the challenges Kevin McCarthy has here not to do another John Boehner.
Well, look, I heard this morning earlier that people are concerned Kevin McCarthy only has one person can make a motion to vacate the chair. Well, every Speaker of the House, except for Nancy Pelosi, has faced the same procedural motion. It's not a new thing, and it can still be a motion that's tabled by 218 Republicans. So I don't view that as something that Kevin McCarthy is remotely concerned about. What he's concerned about is a responsible and sensible way of raising the debt ceiling and curtailing spending and going back to our pre-pandemic priorities.
Congressman Hill, what do you need from Secretary Yellen? What leadership can Janet Yellen provide in the coming days?
Excellent question, Tom. Janet Yellen could step in right now and say that she'll be happy to work with Speaker McCarthy and develop a responsible and sensible deal to raise the debt ceiling and curtail spending in the right way. And I think it would pass overwhelmingly in the House and Senate. President Biden could sign it into law well ahead of any deadline that she has set. And I would say, look, that's precisely what President Trump did with Speaker Pelosi. He asked Secretary Steve Mnuchin, then the Treasury Secretary, to get that deal done, and that's what happened back in 2019.
Congressman, thank you so much. The Republican
you
from
bet,
Little
Tom. Great
French
to be with
Hill,
you. Thank you, Lisa.
With us today in a terrific brief. Interesting there to see how the administration folds in here, and it's a different Secretary of Treasury. There's no question about it. This is not the usual corporate suit and tie. I say that with great respect for the people that have served over the years. This is someone that really understands the economic dynamics, particularly to labor, if we get a shutdown.
And speaking to the 14th Amendment and invoking that, she said that would create something of a constitutional crisis. That said, she is going to G7. She's going to meet with other leaders of the world's biggest economies and having to face off and basically say, yeah, we're a united nation with all of our past history and all of our current clout at a time when there is this huge question mark about whether we can even pay our bills technically under this.
Friday at 3 a.m., Bramwell and I will be the only ones awake to listen live to Anne-Marie Horton in Tokyo in conversation with the Secretary of Treasury. Looking forward to that. We'll bring you huge parts of that interview on Bloomberg Surveillance on Friday. Anne-Marie Horton in conversation with Janet Yellen for her balance of power and, of course, for all of the Bloomberg world. Look for that on Friday from the G7 meetings in Tokyo. We look to 1 hour now. 1 hour, 4 minutes away, an incredibly interesting inflation report. They all have been recently. And I'll tell you, if you give me a service sector chart nudging up, to me, that's the headline.
Yeah, well, I think that a lot of people are looking to see whether they see any of that nudginess and whether that's going to actually change the market's expectation for rate cuts later this year.
The futures -4, Dow futures at -53, the VIX under 18, exceptionally quiet, red and green blinking on the Bloomberg across equities, bonds, currencies, and commodities. This is Bloomberg Surveillance.
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic
Ja, det helt dødt der.
and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down.
Jeg påstår det mer bull nå ned.
We can spend a lot of time talking to businesses and helping them plan and deal with it.
Jeg føler sentimentet har snudd seg. Nå kan det gå mer opp enn ned akkurat nå.
People have had to operate in for a long time.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies.
Du ser hele Europa nå har rettet seg opp.
Plus the interviews you don't want to miss.
Så Tyskland kan faktisk gå opp nå, faktisk. For Tyskland har ikke falt når Europa falt i sted. Tyskland har liksom bare holdt seg sånn noenlunde.
In the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West. Only on Bloomberg Television, your global business authority.
Det er jævla sterkt det hele dag. Selv om vi har tjent penger, så kan vi like gjerne tjent penger på å gå long.
Thank you for being with us. John Farrell on assignment. He'll be back. When's he back?
He's back on Friday.
He's back on Friday. They're not. Oh, come on. They cannot give him Friday off so he can slide it into a, sabbatical.
You can lobby on his behalf.
That's cruel and unusual punishment. We'll have to see what we can do about that. Farrell returns at some point, which will be good.
You kicking him out? Are you basically trying to say, don't come back? Is that what you're saying?
He's got to come back just to do Friday?
I'm not his
cruel
booker
and unusual
agent.
punishment.
All right, carry on.
They wouldn't do that at Invesco. No way. Anyways, futures -6, Dow futures -65. I'm looking at the 2-year yield, 4.04%. I got nothing to say as we're 1 hour away exactly from this inflation report as well. Saving us today is Lisa Abramowitz with Market Movers.
Well, and this actually goes to the point that Bank of America pointed out, that people are actually going into specific stocks increasingly and moving away from indexes because they're giving you nothing, as you said, in terms of an edge or a sense of thing.
It's a huge deal. We're not going to take a ton of time here, but that observation is maybe the observation of the year.
Which is the reason why I love doing these movers every day, to take a look at what the underpinning stories are, because they're not necessarily industry stories all the time. Airbnb, a perfect example of that, shares lower by 14% after yesterday reporting earnings that disappointed, a sense that perhaps there was flagging appetite for going and traveling and staying in some of these Airbnb experiences. That said, beat expectations. So is this a willingness to travel thing, or is this a willingness to pay up to go to Airbnb versus a hotel room? I do think that there is a distinction here, especially.
Hvilken shitcoin da?
What's the trend here on Airbnb?
Har ikke du gjort det jævlig bra på de der shitcoinene?
They're saying they gave an underwhelming second quarter revenue forecast. They said it was going to be a weaker consumer in terms of trips. They're going to try to diversify. I just think it's interesting. How much is this idiosyncratic? How much is this more of an industry story? Rivian rising almost 7% because they didn't lose as much money as expected. So it shows how low the bar has been there in the Tesla competitor. And Twilio shares plunging almost 17% after coming out with a weaker outlook as a software company. And what's interesting to me, again, people talking about how in tech there are these pockets of real good and then there are pockets of potential bad, especially if companies are not investing and pulling the trigger on some of these capital expenditures as they had been in the past.
Is that it? Those are all Dow Jones components that you've got there.
Would you like some more?
We're sort of, it's like the earnings season wrap up, isn't it?
I love, yes, because we're more than 90%.
Home Depot, May 16th.
Det kan gå videre oppover, skjønner du.
We're more than 90%.
Hele Europa løfter seg. Jeg tror de løfter seg på de CPI-tallene.
And then normally you're like, well, why is everyone just focused on Apple? With a big bank?
I don't know, those are the movers. Airbnb, I've never stayed in one of you.
Så Tyskland kan hente seg ganske bra inn her faktisk, i og med at Europa løfter seg litt.
On a value proposition because of the amount of cleaning bills that you have to pay, etc.
The fees,
exactly. And then, it's kind of like a question mark about what you exactly get and the booking time and dealing. So I don't know. I wonder how much people are moving back to hotels. I'm just speaking a little bit to personally. And by the way, JP Morgan shares lowered by 0.3%. Exciting
Nailed
this
it.
morning.
There we go. Finally, an equity data check. See, in the world of debt, sitting here going, why am I putting up with this? Christina Kameny joins us now, Senior Debt Portfolio Manager, Global Debt at Invesco. Thank you so much for being with us. You're a grizzled pro. What's the duration you work at 24/7? Is it like 5 years, 7 years out? What's the duration in your head?
I feel like the 10 years always the default of what you think about, but I feel like in this environment, two's become so important with the Fed moving and what's going on.
So I got the wide inversion, 3 months, 10 year, with way over 3 standard deviations of inversion. What does a grizzled pro like you think of that, of what the signal of 3 months way tippy up here? Help me here. Get the camera up to grab my hand up here, because that's where the 3. There we go. There's the 3 months on radio. I'm not going to be able to move after this. 10 years way down here. Help me with this.
Look, the inversion of the curve, we're at historical extremes, and I think that's part of the reason that the market keeps coming back to we have to have this imminent recession. But that's also what the market has been calling for since the fall. That by second quarter, we'd be in a recession, all of these things. We've actually had a lot of the discussion on our team of how much is it a misguided signal right now because of the distortion of all the central bank buying of treasury assets.
Vet noen hva som skjedde nå? Det derfor jeg ikke har fått treda kjapt? Frigjør minnet. Kan noen hjelpe meg med hva faen som skjer nå? Det PC-en som ikke har nok minne?
Are we going to all throw in the towel on the recession call? Is that the surprise for the rest of the year?
I think people are dragging their feet on it and want to hold on to the narrative they have of the Fed is done and growth is slowing down. But I think you guys were talking about it earlier this morning too. The data has continued to beat and impress to the upside. Across the board. Inflation has been sticky. The labor market has been
men jeg midt i trades, liksom. Det galskap å ikke kunne trade når jeg sitter midt i trades.
Look, we're looking to slow down the market. And you have all of this noise that's been introduced in the last couple of months with the banking sector. But at the end of the day, we'll get some credit tightening as a result of that. But that adds to the Fed's goal, right? So then it's this, how do we materialize how quickly it comes? And
so we're 55 minutes away from the all-important data point of today, which is CPI. And I'm looking at core in particular to understand just the trajectory here. How vulnerable is this market to some sort of surprise amid a malaise of, I could pick my data point and I'm just going to go about my business?
I think the market is vulnerable. And I think, again, like we've seen the noise in the data, right? Like 1 month doesn't make a print. Like we had a 1 month 0.1 core print, and like we're looking for back to like 0.4, 0.5. I don't think that there's enough consistency of the data or 1 month makes a trend. I think the market, both from in rates and in how you see treasuries respond, but also broader risk, is looking for weakness and looking for weakness of risk on the banking sector, looking for the slowdown, the recession to materialize, justification for the Fed to stop right away. I'm not sure if we get it right away, but I think like that's the way that the market is skewed in terms of reaction.
So I guess in terms of a catalyst for the next move, because that seems to be what people are waiting for, something to happen to actually make them have conviction one way or another. Where is the risk skewed? What is the bigger pain trade? That we end up with some sort of upside surprise or a downside surprise?
I think the pain trade is that you have continued stronger data and an upside surprise, and that you actually have some stability from the banking sector and growth.
Is credit the best place to be given the fact that you have credit spreads that could potentially tighten in that strength, even if there is some sort of sell-off in the benchmark rate?
So when we look across the board and we kind of think of 3 levers of rates, credit, FX, credit I think is the least compelling to us across those. And certainly like when we look global, so FX on a global basis probably is the most compelling. But if you just think about credit in the US, credit valuations are on the rich side. I think mortgages look more interesting than credit, than IG certainly. And I think it's a hard debate that people have of you want to rent the income in credit, but if and when things break, credit will break as well.
Well, you two are looking at the shorter term. I'm looking at the Bloomberg Total Return Corporate Index. index, the classic Lehman Barclays series that Bloomberg has now and makes such good use of. And the fact is, as Bill Gross of PIMCO has said, we had a gift for years of price up, yield down. I mean, that's all there is to it. We've had an almost 6 standard deviation move down off a 20-year trend. Right now, we're down, still down 15% from what we remember is normal. At Invesco, are you managing to get back to normal? Are you managing to get to some new total return regime?
I think it's a new normal. I think the environment has changed, right? Like we have a backdrop that central banks have massively inflated their balance sheets. They're looking to go the other way. I think we also have more policy volatility in the sense that all of these central banks have shifted to focusing only on concurrent data. At some point, they need to make the shift because they're waiting for these lags and it doesn't work. But I think it probably gives you more volatility of policy action. So we haven't seen it, right? There's this big debate in the market, like, can the Fed pause and then hike again? Does that diminish their confidence? Yeah. But I think it means more volatility, and I think it's a different normal.
What kind of total return do you get if we get one view that's out there of inflation here in I think it's 40 minutes? If we get a view from 5% down to 3%, dare I say we get a 2.XX handle on core or headline CPI, I believe it's, help me here, out of Villanova, price up, yield down, right? Did I get that right?
You did.
Is the thing we're going to miss here is the recovery in the bond market? That we're all just being way too cautious?
Fram og pisse.
I think with the shift and what we're looking for from the inflation data, the market has given a lot of credence to the Fed in their credibility to bring inflation down. And even though we've continued to have inflation run where it is, you haven't really had market measures pricing it there. So on a kind of go forward basis, I think the Fed doesn't need us to be at 2.0 in inflation. They're confident with this move down, but sitting at 4 and 5 doesn't get it there for us, right?
Is this a fun market?
There are days that it's fun. I think like 25 basis point swings in twos every day gets a little.
Okay, no, but seriously, is it exhausting or is it actually like interesting and something that you could take advantage of?
I think it's interesting, and I think that there's opportunity to take advantage of, and especially in a world where you came out of fixed income was so dead for so long, and especially on a global basis. I mean, our portfolios are more global focused, and you've come from a 10-year period of U.S. exceptionalism that nobody cares about anything that's going on globally. So I think that's a really exciting story for us to tell of why EM, why global, why there are things going on outside of the U.S.
So in the equity space, not that you've ever looked at the equity space, there's single best buy. What's the single best buy in fixed income right now?
Again, I think when we look at those levers, FX and a broad dollar weaker trade, I think the dollar tends to trend in these 10-year cycles. I think EM, FX especially.
Can my Austrian 97-year piece ever come back? I bought it at 136.
It's good convexity to own, I think.
It's got convexity.
It's good
convexity in my portfolio. My 401k is very convex right now after loading the boat on the Austrian. Price down, yield up. Laura, Christina, thank you so much. Christina Katmany with us with Invesco this morning. I love when she comes in because we just don't have these like thoughtful conversations about that's like, what's this spread doing? And, what's this, Brahma world?
I love the idea, too, about the bet on a weaker dollar, because that seems to be a theme that we've had more broadly. And it kind of goes into this question of what's behind that. Is this the loss of the U.S. exceptionalism?
Dollar strength in the euro that Brammel's watching, 110 down to a 109.55 in 45 minutes, an inflation report. Vincent Reinhart at 8:30.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. After making little progress on debt limit talks, President Biden and congressional leaders will head back to the drawing board on Friday for another meeting to try and avert a U.S. default. President Biden called Tuesday's hour-long conversation productive, but House Speaker Kevin McCarthy said he didn't see any movement. The U.S. has announced a $1.2 billion package to bolster Ukraine's air defense and ammunition stocks. The aid also includes satellite imagery services and equipment to integrate Western systems. The word came after Russia's President Vladimir Putin vowed to press on to victory in the war. Wages are rising fast across England and are finally catching up to inflation. Pay rose 10% in the past year for those taking new jobs. That's according to data posted on Reed Recruitment's platform. The figures point to a labor market that remains red hot. They cast doubt, though, on Prime Minister Rishi Sunak's vow to cut inflation in half this year. Electric vehicle maker Rivian reported a smaller than expected loss to start the year. The California-based company also reaffirmed its annual production plans. Rivian has been seen as a leading contender to break out of the pack of EV startups, but it's stumbled since going public in 2021 and has faced a number of challenges while trying to speed up production. And a dog named Buddy Holly was named Best in Show last night at the prestigious Westminster Kennel Club Dog Show in New York. Buddy Holly is a Petit Bessé Griffon Vendéen, or PBGV for short. He's the first to breed to win the top prize. Some 2,500 dogs competed at that show. Global news powered by more than 2,700 journalists and analysts in over 120 countries. I'm Lisa Mateo, and this is Bloomberg.
Did art conservation help you in any way to be a better investor? And should a lot of good investors who learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of pre-work before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
Come on, are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Masser and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals.
From New York City,
from London, in Sydney,
from Washington,
in Tokyo,
9 a.m. in Beijing and Shanghai.
Good morning, everyone.
Have a great evening.
Here's what I'm watching. You do not want to miss this story.
Is there the kind of upside?
Our thesis has been that, there are no companies that ultimately are immune from recession or significant economic slowing, and we don't think that this time ultimately will be different. Our best guess continues to be that there are some earnings disappointments out there.
Lisa Shallett, always interesting, Chief Investment Officer, Morgan Stanley Wealth Management. You dovetail that, folks, with the discussion here of the great divide between equities and bonds, and it gives you a reset, if you will, in the summer of 2023. Excuse me, I'm gasping because I realize I've missed the last 6 episodes of Mandalorian. Futures -4, Dow Futures -46. Lisa, we got to talk about this before we bring in Geetha. And it's just real simple. The last 10-year trailing, the Walt Disney and Company is 6.2% per year total return off of the ginormous success of Iger and the absolute collapse of this streaming. They're doing subpar single-digit work. They don't pay a dividend, 171,000 employees. And, he's got to be going into meetings going, we're not going to do Mickey Mouse. Let's go. What are we going to do?
Well, and
fix it?
The difficulty is they've got such different businesses and levers that are pulling in different directions. You have the experiences that are doing really well. We all hear about that regularly.
Yeah.
If you know any Disney fans out there in Disney World and Disneyland. But there also is this question around, do they go with cable? What do they do with ESPN? how do they leverage their portfolio and then address an older audience rather than, just a sort of younger subset? And this was sort of like the babysitter for a lot
It's a
of people.
blue chip stock with $45 billion of long-term debt. It's a blue chip stock with 24% all-in debt. That doesn't sound like Apple or Amazon. Geetha Ranganathan joins us right now with Bloomberg Intelligence. Is this my father's, or for that matter, my youth, Disney? It seems like a changed company, Geetha.
It definitely does, Tom. And you bring up a really important point. I mean, if you just look at Disney's performance over the past 2.5 years, it's down 45%. Versus the S&P, which is up like 13%. So obviously a lot has happened over the past few years. Majority of that is tied to the streaming losses or the lack of streaming profitability. So really, I think Bob Iger's main agenda item is to communicate to investors and to the street how he is going to be able to turn the ship around and how he is going to get streaming to be a profitable business.
Christine McCarthy has been on the watch as CFO. What is she telling the guy who's Mr. Creative?
Yeah, so I mean, Bob Iger's return here has really been about aligning the creative and the financial aspects of the company. And I think he's going to do a really good job of that. It's about building a robust content pipeline, but it's also about content costs rationalization. And they do have a $5.5 billion cost savings initiative that is right now underway. About $3 billion of that is content cost, $2.5 billion is non-content cost. So again, we're going to be really looking and listening hard to what they're saying in terms of profitability. Remember, this is a company that lost $4 billion last year on its streaming business. But the real investment case for Disney right now is the potential for fiscal 2025 earnings, when we think they can actually turn the ship around and generate $2 billion in profits. And so, any color that Christine McCarthy or Bob Iger can offer today on the call, it's going to be all about that.
What will drive that profitability? Is it going to be simply a streamlined and frankly much smaller staff? They're going through a lot of these job cuts, thousands and thousands of them right now. Or is it going to be some property, some investment in the content that you expect to deliver some results?
Yeah, Lisa, that's a great question. I think it's a little bit of all of the above, if you will. So yes, the job cuts are going to help, but majority of their costs right now in that business is really content costs, is marketing costs, and they are kind of definitely reining all of that in. And then it's not just on the cost side, right? They are undertaking measures on the revenue side as well. So they have this new Disney Plus ad tier, which is definitely going to boost ARPU. And then remember, they had that 38% price increase that they implemented on Disney Plus just late last year. And if you kind of look at the Disney Plus ARPU versus, let's say, Netflix, I mean, it's a $6 ARPU versus $16 for Netflix. So do they have pricing power? Absolutely, I believe they do. This is a super fan product. This is a must-have product for any streaming fan, any Disney fan. So I think they have a lot more levers to pull in terms of increasing prices. So I think it's going to be a combination of all that, which is going to help to drive profits eventually.
What about ESPN? Is that still on the table as far as some kind of spinoff?
Yeah, so what is really interesting, Lisa, is that this time they're actually breaking out ESPN. For the first time in their history, they're breaking ESPN out into its own, division, if you will. I mean, that definitely clarifies, I think, a lot of the financials, a lot of the profitability metrics, because it's always kind of been obfuscated in that linear network business. Remember, this is, of course, this used to be the crown jewel, and it's kind of now become this big pain point for Disney. But it still generates $4 billion in operating, income, and that's nothing to be laughed at. So I think really the big question is now, how do they make that bigger push into direct-to-consumer so that it's incremental and not cannibalistic to the ESPN business? So yes, a spin, a sale, anything, and any color that they can offer, again, I think will be looked at very closely.
Geetha, something that you guys excel at, Hulu, Disney Plus, ESPN Plus. Do we actually want Trio Premium? Is there a demand for Trio Premium at $19.99 a month?
That's a great question. There is a demand actually for a bundled product. And what we've seen with the bundle across the board is that not only does it help with customer acquisition, but it helps tremendously with customer retention. And so, for them, it's all about driving this bundle and kind of, getting that maximization of, engagement.
Right.
They are able to do that with the bundle.
Where's the lines cross? How far out do the lines cross where Trio Premium takes over the business? Is that like a 3-year out glide path for Iger, or is it, dare I say, 5 or even 10 years out?
No, I think we're definitely looking at that inflection happening sometime over the next year or so. But again, Tom, it all depends on what their strategy is going to be with Hulu. Are they going to hold on to the asset? They own about 2/3 of it. Are they going to hold on to the asset? Are they going to sell to Comcast? Iger has kind of spooked investors, I think, a little bit by saying, you know, everything is out there on the table and that they're not really necessarily interested in general entertainment. So again, that leaves a lot of unanswered questions. So, you know, I think right now, top and center of everybody's mind is what is their strategy going to be with the Hulu asset?
Geetha, what a brief. Thank you so much. Geetha Ranganathan, truly expert on this with Bloomberg Intelligence. Paul Sweeney, who I enjoy doing radio with, Paul and Geetha invented this. I mean, this whole idea of just follow the industry, forget pretty much about buy, hold, sell, and just follow the industry. Do you have Trio Premium or bundled stuff? I don't.
I don't. No.
I don't.
I mean, I don't. I will say that what she was talking about in terms of pricing power, or that they have a product that people will be willing to pay for, is bearing some fruit. And we're seeing that increasingly in terms of people getting used to paying for content in a way that 5 years ago they weren't. New York Times actually just reported first quarter profit beating analyst expectations, not because of advertising, because that actually declined, but what they saw was an increase in actual subscribers. People are getting used to this. Maybe it's just, you know, Wordle that people want, or, you know, the cooking section.
Agree. Yeah, we're getting used to it. I will go with that. But it just seems like with the bundles, we're bundling ourselves back to where if any of us had the courage to add up per month what we're spending on all this stuff, is it any different from my cable TV bill of this number of years ago?
In some ways, it's more expensive, actually, if you take a look at how much you're bundling and what the full year cost is. That said, people are able to choose what they want. And I think that is the distinction. And so if people want to see something, they will pay for it, especially without advertising. And that is something increasingly that a lot of these companies are exploiting. But I do think there is a shift in psychology from where we were a couple of years ago when people were just like, don't make me pay for what I could get for free, or trying to get, you know, find hacks around the internet. You did that, right? Where you try to like Google a phrase and then the cached version you could get for free, and then they turn that off.
Our guests that we have coming up here, we're going to sell you right now, folks. So if you have to lean with us into the 8 o'clock hour with Mario Gabelli. He's the CIO of Gabelli Funds. Lisa, this is a guy who's seen 6 revolutions in media. He was back when Sarnoff was starting off the, you know, NBC and RCA and all that. And the basic idea here is Mario's a guy who's seen every technology come forward where, oops, you got to make a profit. And that's, oops, where we are right now with streaming.
Especially at a time where there definitely is a shakeout and the pressure of inflation, and suddenly content isn't king. We're also about a half an hour away from that key CPI Wednesday. It doesn't feel like CPI Wednesday. People don't seem that focused on it.
Because John's not here to cheerlead it forward. I mean, John would be all over this.
Well, we're trying. Other people are like, you can kind of make of it what you want.
I agree. There is some inflation analysis fatigue out there. And it's like it's down. As David Kelly said, you know what? It's down from 9% to 5%. I don't hear anybody saying I feel better.
No, and everyone's, you know, and people are like, just wait for another month. What's 1 month?
On radio, on television, why should you stay with us? Mario Gabelli, good morning.
Every art institution I know of wants you to serve on their board, and you're very involved in the art world. What is it about art that attracts you?
Well, art is essential in a democracy, David. Art is so important. We know what art does to young people. We know that exposure to art brings about higher levels of empathy. It helps people understand how other cultures, other people live. And it just brings out the kind of humanity in all of us. There are times when I have observed leaders use language that is inhumane while talking about other human beings, while talking about the world. And I think to myself, this person has clearly never engaged in beautiful poetry. They've never listened to the words of a great playwright. They've never sat and reflected on a beautiful painting or picture. Because if they had been really educated, had they really been exposed to the arts, they wouldn't find it possible to use this kind of language.
Bloomberg UK, your source for news and analysis covering the biggest challenges facing the UK government, economy, financial services and markets.
Tax cuts should not be the priority. It's about a credible plan for growth over the next 2-3 years.
In this post-Brexit world, how do you see actually servicing your clients?
It was disruptive and it's going to have implications to how capital raising works.
Now we're having the perfect storm in the UK.
Watch Francine Lacqua Thursdays at 9:30 a.m. only on Bloomberg, your global business authority.
We had a long-standing presence here in Houston for the past.
Kan jeg fikse sånn TTS? Hva betyr det for noe? Jeg vet ikke hva det betyr for noe.
We bought a piece of land. We
Aner ikke hva det
sold
betyr
this
for noe.
building. And in doing so, we had to also recalibrate how we were building it because the pandemic hit us. And we thought about recreating a work environment that is very, very different, that is catered for this new structural way of working, which we call edge to office, where people don't always come to the office to work, can work remotely from their homes, their edges, but have to come back to the office for specific reasons, such as team
Jeg tar litt gevinster nå, for jeg vil ikke sitte med for mye last opp av tallet.
With regards to the hybrid
Ta gevinst fra toppen,
model,
ut.
Do you see that as something that will
Ta gevinst,
persist longer term
ut.
when the pandemic is long
Ta
gone?
gevinst,
Yes, no
ut.
question, this will persist.
Sånn. Du har tatt gevinst for de der oppe, sitter fortsatt short her. Selv om jeg tror du kan gå videre ned, så gidder ikke jeg ta for mye risiko. Risiko.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad
Kan
actors
vi
and
ikke
some good
sette
actors.
text to speech. Jeg vet ikke hva det er for noe. Jeg kan ikke sånn Twitch-greier. Jeg aner ikke en dritt.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
If there's an accidental default, you will see a drop in stock prices.
Å, fett. Jeg vet ikke hvordan det er noen ting å gjøre der.
We know the Fed's balance sheet has grown so dramatically.
If inflation continues to go up, we need to watch the bond market because long-term cash flows dislike inflation a lot.
Jeg hørte folk som tjener penger på streaming. Jeg skjønner faen ikke hvordan de gjør det.
From recession or significant economic slowing.
Companies have been preparing now for several quarters for a recession that hasn't yet arrived.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
It is CPI Wednesday, 30 minutes away from that key inflation report in the world's largest economy. And does anyone care? Welcome back. This is Bloomberg Surveillance on Bloomberg Radio and Television. Tom Keene, Jonathan Farrow, Lisa Abramowitz. John is off today. And we are here awaiting that key CPI data as people try to reset, understand a catalyst for some sort of conviction in an otherwise convictionless market, Tom.
Yeah, Mario Gabelli coming up too. We're going to get to him as soon as we can. Everybody leaning forward on the equity market and Mario Gabelli at 41.20. But I'm sorry, inflation front and center here today. It's an inflation that Mario Gabelli remembers 3 or 4 times in the past.
And it goes to the whole pricing power question. And when you talk about stock selection and stock picking, that is where people are going, because right now you cannot get a clean narrative on a macro sense. People will take a look at today's CPI report. Some people will shrug it off and say it's just 1 month, and we will see people trade. But nonetheless, that stock picking really is gaining steam at a level that we haven't seen since the financial crisis.
And I would suggest in his youth, Mario Gabelli, as a young Turk, studied under the guidance of the value investor Philip Carre at Pioneer. And Mr. Carre said inflation is a bright light giving you a boosted revenue outlook that's always underestimated. Revenues do a little bit better.
A bright light that also sheds some information on who's the winner and who's the loser. And that I think will also be interesting to hear from him in terms of consolidation.
For jeg satt en trade.
At a time when you
Jeg
are
tredde
seeing
han
the
opp.
bigger companies do better and the smaller companies do worse.
A headline
Jeg
coming
shorta
out
han
right
opp.
now, this from the New York Post, and it's migrating out on
Hæ?
Twitter as well. And this has to do
Hva
with
sa du?
a gentleman on Long Island who's in a bit of difficulty.
Skulle ha en sånn skål, et eller annet dritt.
Santos, Congressman of New York, now, quote, is expected to turn himself in today to surrender to authorities. And the judicial process that's happening in the Eastern District of New York.
Yeah, he was indicted by U.S. attorneys yesterday. He is reportedly going to surrender. But the reason why it is interesting is also because of the small margin that Republicans have in the House, 5 seats, and he is one of them.
Lucifer må
So
ha
there's a
dratt.
question, especially as we talk about the debt ceiling.
Jeg
Right
vet
now,
ikke.
in markets, we could see a little bit of softness here heading into...
Jeg klikket litt.
Are
Hæ?
people doing anything right now?
No.
Nei, jeg har sagt må ut.
No, they're not.
Jeg har sagt må ut.
Which is good, because if Gabelli's on,
Nope.
he wants the full attention of what's out there. And so if it's this boring and this much of
For
a
hele huset ble trashet.
it's a perfect time to talk to Mario Gabelli.
There we go. And that's the reason why people are looking at single stocks, because right now it's S&P futures.
Okay.
41.27 down, plunging 0.2%. That's where we're at.
The Euro report with Brammo 109.47, slightly weaker. I should point out there's a football match in Milan today. I don't think that has anything to do with. It's like following Elon Musk on Twitter. We follow the surveillance Gulf Stream, and it's got something to do with triangulation and John Farrow as well.
Subtle.
He is the ultimate bottoms-up investor. Mario Gabelli cut his teeth on machinery, things, as Gartman says, fall on your foot and hurt you. He is a sell-side analyst who's had a claim with a broader portfolio over the years in entertainment and such. Mario, I've got to go.
Skal jeg vise deg?
You know I couldn't do it as a diehard Red Sox fan. I'm not going to go long the Atlanta Braves. But this is textbook Gabelli. It was 20-something. Now it's on the edge of 40. Explain why the Atlanta Braves are going to win the Gabelli World Series this year.
You know, I'm sorry about the Red Sox losing last night. The Braves are doing well. Independent of that, the pitch clock is having an impact on baseball by shortening it. We'll get the results over time. But in addition to that, you have other reasons for attendance. You have other reasons for revenues. There's about 62 million shares of BATRA and BATR, the lower voting stock. Our clients own a significant piece of the voting stock. And so as a result of that, we are obviously cheerleaders for the Atlanta Braves. And we think between Battery Park, that is the area in which the stadium is in,
right,
the value of the franchise, I think you're going to get, $45 to $55 a share somewhere in the next 12 months.
Right.
That's it. It's and if you don't want to own it because you got emotional dynamics such as life, that's your portfolio. But give it to everybody listening. Should get 100 shares for Mother's Day for someone that they like.
Mario Gabelli on the Atlanta Braves putting me in the Gabelli it'll double timeout share as well. There will be reports on Disney, Mario. I think
Vi må plante hekken i dag, da.
Capital Guardian Trust as being people that have followed this entertainment idiocy. Were you surprised at the streaming nonprofit in his Disney?
Var det ikke her, da? Det var bare hentet... Nei, ikke helt tatt. Det var bare hentet... Det var ute et minutt.
As an example, Disney will probably be 28 to 30 billion. Netflix is trying hard to get up to 13 or 14 or 15 billion. Paramount's higher than that. Then you have Apple trying to catch up. But Apple cumulatively, maybe for the last 5 years, has spent 13 billion. So they don't have any content. So where and how do you find, I Love Lucy and I Love Tom Keene and I Love Lisa? Those kind of contents are buried in there and they come back. And for example, A Beautiful Life with Jimmy Stewart, because of the bank run, people are going back and looking at that. So how important is the embedded value? When you do a theatrical box office, you had a 42
Er det 14.30-tallet kommer?
But the theater operators get 40% of that or higher. So
Er det 14.30 det kommer?
Streaming, and unfortunately, because of the regulatory organizations, the companies like AT&T and Verizon and T-Mobile don't get paid for people.
Jeg kommer ikke til å sitte over metallet. Kommer bare sitte med et par kontrakter. Jeg skal ikke ta noe risiko.
So, Tom, from Disney's point of view, yes, you got a learning curve. You've got some dynamic short term. You want to go global. We can't be so. The U.S. has only got 350 million people. Right. The rest of the world has 7 billion more.
Right.
Plus.
Murray, are you still enthusiastic about Paramount? Do you still think that Apple's going to buy them?
My own reaction is that whatever You have Bob Barkley doing a great job running the business. You have good content. They're obviously making the tough decisions to give them financial flexibility. The Federal Trade Commission turned down an ability for them to monetize Simon & Schuster, what they're going to do. They're going to do BET. They're going to try to raise some capital there. But, you know, from my point of view, a year or two from now, they have to sell the or spin, which they've done before. They're very good. For example, nobody applauded them when they bought Pluto for as New Yorkers would say, bupkis, and they basically have done a great job on that. Now, independent of that, without getting into too much detail, you know, they were spending $600 million a year on cash dividends. That's going to be down to, you know, 20 cents times 650, you know, a significant amount of less. So over the next couple of years, put the foundations back in place, accelerate the growth, and execute. And that's what they're going to do. And then you ask the simple question.
Yeah.
If you got a stock selling at 30, which is now 19,
Jeg har ikke kjøpt mer PGS.
and you basically multiply
Jeg sitter
that by
fortsatt
600
med
million,
dobbel posisjon. Jeg hadde tregangeren, tok ut en tredjedel for 4 dager siden. Ikke kjøpt den inn igjen.
sale of these assets and keep the cash flow. So you're talking about a tiny little morsel. So if Sherry, who owns 30 of the 40 million voting shares, decides that, you know, hey, you know, Apple wants to pay me, you know, X dollars, and it's de minimis for them, and they don't have the broadcast stations anymore because they're spun out, they're in a process of spinning. You know, lovemaking takes place in a variety of ways.
So, Mario, on a broader level, you did just get back from Omaha, where you were at the Berkshire Hathaway annual meeting, shareholder meeting. Have you ever heard Warren Buffett this negative, this gloomy, this pessimistic on stock? Did you take a message from that you also adhere to?
I disagree with you completely. Warren Buffett basically pounded away at the idea that if you believe in the virtues of the American system that allowed him for 80 years, when he first started investing at the age of 13, to make a lot of money, that tailwind continues to flourish. So is he practical? Yeah. I mean, you know, he's very patient. And so as a result of that, he's got his cash. He's waiting for it. All of us are going to focus on a 13F that's coming out by Monday and see what he bought, what he sold.
Right.
You know, so what? You know, he's got smart people working for him. And he first announced Greg Abel now taking over, and Ajit Jain continue to run the insurance business. So
Mario,
the management succession has been identified.
Everyone wants to know the value trap that's at banks. In your research note, you say to me that you want to buy a Southern bank for acquisition. My theme for the year is the great zombie roll-up. Are the smaller banks one collective zombie, and are we going to see a massive bank roll-up led by banks in the South?
You know, look, you got all of the right
Skal vi lære dette snart,
a lot
Arne?
of banks, but you know, let's flash back. You and I have been doing this for a few years. We had a crisis in 1967, 89, when the banks lent money to oil tankers or whatever they were. In the 70s, you had the Herstatt Bank, had the whole bunch kind of go bust. You had old,
Du har PC-opp, har du ikke det? Har du laptopen, og så ser du på liven min, eller så sitter du der hvor du sitter nå, med laptop der, og når jeg sier kjøp, så kjøper du, når jeg sier selg, så selger du, og så tenker du ikke noen ting, du bare gjør akkurat det jeg gjør, og så etter hvert begynner du også å forstå og skjønne. Hør hva jeg sier til deg. Hvis du gjør det hver dag, så begynner du å skjønne det.
You still need to have that service for the American
Du
public.
trenger ikke være oppe så tidlig som jeg er, bare du er våken klokka 9. Bare gjør akkurat det jeg gjør. Du trenger ikke kun noen ting, bare akkurat det jeg gjør. Og så begynner vi med sånn demokonto først. Og så kan du få 5.000. Og så kan vi få de 5.000 til å bli 10.000. Og så tar vi det ut. Så jobber vi med 5.000 hele tiden.
Well, you got a lot of dynamics.
When
I was growing up, Tom, playing World of Warcraft, and I'm now playing Diablo 4 on my machines. I am very quick. I learn. I want instant results. I want to play momentum. Clearly, you know, and then I get on Robinhood, and then you get quants, Momo, algos, and AI all coming together to do trading. The markets are the markets, okay? The values are the values. over the next, right now,
Har
for
du
example,
kjøpt ned
even if
Nei.
GDP is down
Trader
2%
du trader
real,
egentlig
and
uten stopploss,
inflation's
men har du
5,
noen grenser?
you're going to get
Både og.
revenues growing at 3, and that's a large risk for what you
Jeg
talked
sitter
about
jeg
before
sitter
the
og
show.
følger med hele
Companies
tiden, da.
having gross margins, SG&A,
Så jeg
they're
setter
learning how to
stopploss
deal with
når jeg
manufacturing,
føler
reshoring to
for
the
det, holdt jeg
United
på å si.
States. Kaizen is out. That is the just-in-time inventory. Now
Og
you
så
bring it
er det en
closer,
grunn til at ikke
and
jeg
you get more
setter
efficient,
på store
and you do
posisjoner, så setter jeg
AI,
ikke stopplosser
and
i
you
det hele
start
tatt.
doing a lot of automation,
På CFD-er.
and you pray for immigration.
Jeg vil ikke si alle hemmelighetene, men jeg gjør ikke det med vilje på CFD-er.
Mario, we've talked about how we are seeing an increasing number of people go back to stock picking from just simply indexing. Do you notice that in the day-to-day?
Hvem da?
Do you notice more people
Har jeg
interested
kylling?
in the
Å,
trade that
spiser
you
han på, jeg
always
glemte det.
practice and you continue doing so?
No, but go back one giant step. I come from a culture where
Men stort sett så kjører jeg
Bruce Greenwald and now Tom
kjører stopplosser på
What is the value
20
of the
pips.
enterprise? Who is going to buy it? What would private equity pay? What is the capital structure that they can tolerate?
Trader, er du i markedet, har du tatt ut?
How good is it? And then you cut through all the crap. Right.
Trader, er du i markedet, eller har du tatt ut? Jeg skal også ta ut på den, tenker jeg.
You're buying them at, are they well below what you think the intrinsic value is? And therefore, that discount, will go up and down. Over time, you're going to do okay. I think that the market, Tom, in 45 years will be 1 million on a Dow. So, that's 7-8% returns.
But you're showing your cards here. You're showing your Morningside Heights cards here. And the bottom line is Columbia Business School. And you mentioned Grab, Dot, and Coddle. And a guy named Buffet went there years ago as well. Do the young Turks of Columbia Business School believe in the traditional Warren Buffett securities analysis?
There's a lot
Warren
of
Buffett securities and analysis.
Analytics. Tom, if you and I were around 200 years ago, what we would be talking about today on this show was that the Rothschilds got a pigeon to tell them who won the battle at Waterloo, and that they went down and did something on the stock market. We can talk about that another time. Then we used to go to have Warren Buffett go down in Washington, D.C. to microfiche data, or Graham. I did it at the New York Stock Exchange. Today, I gave a speech and I said, Chat GPT. I got my grandson to do it, and it was a brilliant speech. And it took him 5 seconds.
Yeah.
So the question is, how quickly can we gather data? How quickly can we use it? But then when you got to be some practical judgment has to go in the mix.
Murray, one more question. Speak to the people out there that want to be in the market, but they're scared stiff. How do you play? How do you participate?
Well, first of all, you got to do what Buffett says, which is patience, long-term. Don't worry about the short-term dynamics. If I own a farm out in Iowa or in the Bronx, my farm in the Bronx, I'm not going to wake up every day and figure out what the prices are. I'm going to look at it and say, what are my cash flows and what are my predictability?
Farm in the Bronx?
Same thing with good businesses. If you buy a good
Takk for at du passer på, Kursen.
I have like the Tegna, Taxtron, Trayton, Televisa, my T's. We can talk about these things. The stocks will go down, they'll go up. But, 5 years from now, we're going to make it 10-12% CAGRs.
This has been brilliant. Mario Gabelli, thank you so much for particularly there on banks in the South as well. What did you learn there, Lisa? That was a tour of force.
Well, just the difficulty in really doing the discipline that he was talking
about.
Doing the work. And
That's
understanding
101, yeah.
how to do that research. I do think that some of the edge that people are looking at as investigative journalism, in a way, is to dig into some of these companies, the streamlines, to understand exactly the dynamics that perhaps other people might be missing.
I mean, it's going to be interesting to see, and as he talks there about making, the discipline of 7-8% per year in equities, and a lot of people have a long-term time frame of maybe Friday when Farrell comes back, or maybe Wednesday of next week is really long-term.
Well, and in the meantime, what we do have, we are about, 13 minutes away from the CPI report. And just giving you a sense, we are expecting 5% year-over-year CPI. That's the headline figure. We are expecting with core, and I keep going back to this because perhaps it strips out the more volatile energy and food sectors, 5.5% down from 5.6% in the prior month on a year-over-year basis. Do we see this come in hotter than expected?
that a lot of people are saying, just to game it out, a lot of people in the market are saying that could be a pretty significant catalyst at a time when people have discounted inflation coming back up and said, okay, we're already in this disinflationary kind of realm.
And as David Kelly said, it's a lagging indicator, and he's already framing out 3% or even sub 3% inflation. I think Ed Hyman of Evercore ISI and others got there. David Rosenberg got there very, very quickly, and that's out there. Forget about it. In Washington, all they're hearing about, even off of a gallon of gas maybe being a little bit better, and even with real estate and the reports, rents are coming in around the country, not in New York City. Folks, you know what? 5% is just totally unacceptable.
Especially at a time when you do have a concern about negative real wages, as you were pointing out. We also talk about what drove this inflation, and a lot of people pinpoint spending, which is one of the reasons why it's that much more salient that we're having the debt ceiling debate again and again, and right now in a more poignant way perhaps than we have in the past. Joining us now, Henrietta Trace, Economic Policy Research Director at Veda Partners. Really appreciate you joining us. Henrietta, your take on the non-action, the non-development of yesterday's meeting, and whether any of these meetings will really yield any fruit until, as someone said yesterday, the 11th hour, the 59th minute, and the 59th second.
Yeah, that's exactly right. I mean, anybody who's been through this movie before knows that they do not get anything done until they have to. In DC, we are functionally 4 weeks away from June 1st, which even Treasury has not been hard and fast on the actual deadline. The House has been out of session for about 10 days since their vote a few weeks back. So when they had the meeting yesterday, my base case assumption, and from speaking with staff, was that nothing was going to come of it. There was going to be press availability. They were going to shake hands, get a lot of, jabs in, which we obviously saw from Speaker McCarthy, sometimes a little bit more aggressively than anybody would have anticipated in an ordinary year. But he's really proving what he wants to be and present as Speaker. And so this was much more about posturing. You'll notice that the biggest takeaway was that staff was going to get involved now. That's all I want as a former staffer, is to get staff involved. They'll start meeting today at the leadership level. One of the areas of concern I hear most is, hey, the House and Senate are not going to be in session at the same time for the next consecutive 3 weeks. Are you concerned? And my answer is no. I don't care what rank and file members are doing. I really only care what staff is doing, and they will be meeting tonight. They are free to work through the weekend. They do not need to attend every single fundraiser back in the district the way that members do. So there really are 3 full weeks to get a resolution here. And the way that I would phrase it just briefly, a good rule of thumb here is look at the Thursdays for the rest of May. Thursday of this week, we start to get action out of staff. Thursday of next week is the earliest I would expect a Senate vote, and then Thursday of the following week is when I would expect a House vote. So that's plenty of time.
This is like waiting for smoke signals, right? Wait for Thursday, and we can get some sort of sense of what's going on.
It's very Apple.
Yeah, Pastor Keene over here this morning. Henrietta, I am curious about this George Santos development and how it relates to some of the close margins that Kevin McCarthy is working with. The New York Post is reporting that GOP representative George Santos is going to surrender after the indictment that we heard about yesterday. He does plan to turn himself in, according to this report. This highlights that Kevin McCarthy is working with a 5 Republican margin of error that he has to keep on the rails. Does this change the equation at all in your view?
I mean, it really underscores the current equation. This is an empty shirt that you're trotting around that has no committee assignments and is only there to vote the way that Kevin McCarthy tells him to vote. When we were dealing with the Limit, Save, Grow Act initially, I thought it was great when Santos came out and said he didn't know which way he was going to vote. He's going to vote whichever way Kevin McCarthy tells him to vote, and that is the requirement in order for him to stay in Congress. So I think this just underscores how razor thin, as you point out, the margins are for Speaker McCarthy, that you would keep someone like George Santos in there, that the rest of the caucus has to explain away. And that's the tricky thing for them to do.
Why can't we get to a commission? Simpson Bowles or some flavor of that. Is it, Henrietta, you're expert at this. Is it so fractured we can't even get to a commission because these clowns are afraid of the outcome of a commission?
I mean, give it time. Alan Simpson is an all-time rock star as far as I'm concerned. Those were great days when we had the Simpson Bowles Commission. We even had the Super Committee at around that time, if you'll remember that group of people. So to get a serious answer, when I started out yesterday, I assumed that there would not be any breakthroughs in negotiations at the White House. So my immediate next step was to listen for any dog whistles for a fiscal year 2024 appropriations process, discussions of the budget,
Skal det bli ris, eller?
discussions of actual government spending
Ja.
in those
Har
12
du tatt
approach
ut,
bills.
tatt ut det, for den
That
brenner
is
seg.
something that I spent my
Ja.
time with staff
Tatt ut
collecting
kontakten. Jeg
thoughts
lukter
on,
at
hey,
det
what
brenner
are
seg.
the odds we kick the can down the road, just get a short-term suspension going from June 1st to September 30th, which is the end of the fiscal year, and see what the odds are and whether they're rising for that sort of 4-month bridge period. That 4-month bridge period is when you'd see Simpson Bowles or super committee start to form.
Yeah, you've teed up the can like Lucy with Charlie Brown. I mean, I know the way this goes. What happens the first week of October if we moveth the can to September 30?
Exactly. So this is my worst case scenario and has been since January, this situation where we never reach a conclusion. Why? Because, we only have 4-vote margin in the House and a Democratic Senate. What you start seeing there and the risk is that we only do these short-term punts and this sword is hanging over us for the next 2 years. That's, in my opinion, a very bad outcome. And that could very easily pass. It happened in 2021. We had always the federal fiscal year ends on September 30th, but at the time we couldn't agree on the appropriations bills either. So we passed a 3-month extension of those called a continuing resolution into December 3rd. And then we simultaneously bumped the debt ceiling out that same exact period. It was a $480 billion suspension specifically designed to get the debt ceiling to coincide with the CR expiration, which of course had been punted from September. So that's a very real risk.
Yeah, Henrietta Trace, thank you so much. She is chairman of the Alan Simpson fan club in Washington with Veda Partners as well. With Senator Simpson, every time you interview him, it's a risk because you have
Han hadde på
no
5-minutters
idea
chart. Det
what
er ikke rart
Alan
jeg ikke syns det gikk treigt.
is going to say. You have
Sometimes
no
like
idea
the
what's
show,
going to. He's wonderful. I mean, it's really a throwback to a different time and place where these people were
Sjekker du hvem det var, da?
managed and
Det var Mortis.
That's part of speaking of Congressman Hill of Arkansas. He's removed from the modern
Hæ?
choreography of the
Skal du lukke den, for det er malt.
The
Nymalt.
curiosity for me today is what the choreography of the inflation report is going to be in terms of
6
both
minutes.
how we get the numbers, what the response will be in markets, and then what the political response will be, given the fact that this is a visceral type of number that you spoke about, with the real wages being deeply negative for another year. This really coming at a time when a lot of people think that the balance of risk seems to be more heavily weighted on cutting too much, even though the inflation is still perhaps a little bit higher.
The Bloomberg
than most people
surveillance
like.
cliche is to look at headline, look at core, and then we go beneath the headline numbers. And quite frankly, Lisa, inflation more than the jobs report is going beneath the headline numbers. And what I'm really looking forward to talking to Mike McKee about, not only at 8:32 when he's buried, but 3 hours on, or frankly 3 days on, is the dynamics Mike McKee sees in real estate within the service sector component.
On real estate, on autos, I mean, the specific
And you can't do
subsectors, you see all of these analyses about how auto prices really have been whipsawed and how they went back up in used car prices and then they came back down, and how much this might really underpin a lot of the CPI movements. But yes, people are getting granular at a time where there's such noise. I mean, this is such an uncertain moment to really gauge out some of these basic metrics. And we heard that earlier this morning as well from people saying, you can pick your...
Nå kommer tallene om 3 minutter.
Inflation, core inflation, Cleveland inflation, Dallas inflation, they're all out there. I think there's Upper West Side inflation too.
Om 3 minutter.
That's a special one as well. We're going to have this for you here in 4 minutes. Please stay with us. Always moving the markets in perspective from Andrew Hollenhorst in the next hour. This is Bloomberg. Stay with us.
Jeg skal ta ut halvparten. Jeg har ikke så mange short igjen, så jeg tar den ut. Halvannet minutt. Sånn, tok ut, tar ut litt nå også. Så.
The top names in climate change are on Bloomberg.
Sånn. Nå har jeg liksom litt kontrakter inne nå.
We're still putting 162 million tons of man-made global warming pollution into the sky.
Det kan gå begge veier.
That's trapping as much extra heat as would be released by 600,000 Hiroshima-class atomic bombs exploding every day. That's what the scientists tell us, and the data shows it. That's crazy. That's why we have a third of Pakistan under.
Kan noen poste helvete da. Kan noen poste tallene, så vi ser tallene? Jeg har ikke, får ikke live.
We're seeing an increase in the flows of climate refugees crossing international borders that are due to
Vi er kanskje live på sin beside.
unless we take action to solve the climate crisis.
Nobody covers climate change like Bloomberg, your global business authority. Today's CFOs are reshaping the C-suite. Bloomberg's chief future.
Eirik, du må ikke herme til meg nå, for nå er det 50-50. Alt kan skje.
Golf's popularity is surging. That's been great for the LPGA. And CFO Kathy Milthorpe is focused on maintaining that drive.
The ability to be able to compete at the highest level and earn purses
Hva var tallene for noe?
with their male counterparts is a mission that we're driving towards every
Kan noen gi meg tallene?
Chief Future Officer, today on Bloomberg.
Tallene? Herregud, trekk det.
Inflation in America, it has been the story of the Biden stimulus.
Hvorfor viser vi ikke tallene live da?
Killed everyone. There's no other way to put it. 22 years rather of negative wage growth. And we will get statistics here and
Har noen tallene, eller?
a new reset on inflation and a new wide debate on the
Ja, de kom inn bedre enn ventet,
price
faktisk.
change you're facing every day. Lisa Bramwitz and Tom Keene here on a day of inflation, goods, services.
De kom inn bedre enn ventet.
Michael McKee to assist forward. Michael, these seem to be
Da kan du få et bullrun her, liksom.
statistics. Give us
Well, they're what you'd call in line. It looks like economists did a pretty good job of forecasting CPI as the month-over-month change for both the headline and the core comes in exactly as forecast at 0.4%. Now that's up on a headline basis over what we saw last month, which was a 0.1% increase. We're looking for any kind of revision to that. On a month-over-month, year-over-year basis, rather, 4.9% for the headline, which is a little bit below the 5% that was expected and 5% we saw last month. 5.5% as expected for the core year-over-year, and
Det er
real
ganske
average
in
weekly
line, altså.
earnings. An average hourly earnings both negative, down 1.1% for weekly and 0.5% for hourly. No surprise there, Tom. You mentioned right before we went on that we'd see negative wage growth. We're still seeing that.
It is a shift here, to say the least, like 10 basis points in the two-year yield. If you're not part of Global Wall Street, the operative word is ginormous. The two-year yield from a 404 down to 396. A 10-year comes in 5 basis points as well.
Grattis, Norsor.
The Gramo bull market is intact here with an equity lift of futures green, and they go up on a nice. Lisa, what do you think? On a nice level, they go up, a little green in the screen.
Well, here's the question that I have. Was the whisper number just basically a much hotter inflation read? Was this basically taking the tail risk of a reaccelerating inflation, taking that off the table? Is that the sort of relief trade that we're seeing in two-year yields in particular? Or is there something in some of the subcomponents that's getting people's attention, the super core, that's getting people's attention?
Yeah, I don't mean to interrupt, but I'm looking over at McKee. He's got the secret sauce here, the mythical secret sauce. And Lisa, it's like 20 lines of data. What are you looking at there, Michael?
Well, here's what moved during the month. No surprise, energy was up quite a bit by, let's see, for gasoline, 3% during the month. So that is a significant increase, but that goes into the headline. Less concerned for the Fed. Natural gas significant decline there, down 4.9%. People have been looking at that as something of an energy relief. And then the cars, used cars up 4.4%. They were down 0.9 last month, and they had been down for about 6 months before that. So 9 months, I think, is the total. So anyway, a big rebound in used cars helping push things up, and apparel up 0.3 on the month. Medical care commodities up 0.5%. So a lot of these were forecast by economists going into this, and it looks like CPI is coming in pretty much as expected. And it's important to note that the Fed has always said they would expect a volatile process of inflation coming down, that it wouldn't be linear.
Yeah.
And we would see bounces, and that's what we seem to be seeing here.
Lisa, I'm hearing as expected, but markets aren't telling me that. Markets
Faen, det droppa jo. Helvete, så var jeg borte.
And Ira Jersey of Bloomberg Intelligence put this out, that CPI has been among the most market-moving data points in the past year or so. So this actually explains that, even though we're not necessarily getting the why from the actual data. Mike, is there something that we're missing, the why, that's causing the market-moving event of today?
I'm not seeing anything that stands out as something that...
Faen, det var jo skikkelig penger her nå.
I think what you have is a market that is attuned to... you had people basically looking for the Fed to, in July, start cutting interest rates. And so everybody's repricing off of that at the moment, but it'll take a while for them to kind of figure out where we go from here. The initial knee-jerk reaction is something that we don't necessarily need to follow through on. Airfares, good news.
Oh, please.
Down 2.6%.
Oh, I feel better.
There's a surprise. Yeah. So, Tom, on your next vacation, you'll be able to spend a little bit less money.
50 lines, 100 lines of data. Michael, he's looking at that. He'll have that into radio and television in the 9 o'clock hour as well. We're thrilled to bring in a gentleman that can really bring in the perspective here and the relative sense of this inflation to decades previous. Vincent Reinhart joins us this morning, working with Chairman Greenspan for years, chief economist at Dreyfus and Mellon, and we're thrilled he could come in here with a big, big move in the 2-year yield. Have we tamed inflation, Vincent Reinhart? Can we say the path here, that there's a confidence to get back under 3% inflation?
Not particularly. Service inflation still had a good bit of momentum. But as to Lisa's question about the why, I think the why is the headline. Inexplicably, or by rounding, 12-month headline CPI is 4.9%. I view that as the chief talking point for politicians, that inflation has dipped below 5%.
Vince Reinhart, we're going to go to Mike McKee, who's just found the one data point to help Dreyfus Mellon right now. What do you got, Mike?
Well, this may have influenced trading, and I also got a note from somebody who's watching us who wondered why I didn't say this before, and it's my omission. Owner's equivalent rent up 0.5%, and rent of shelter up 0.5%. Rent of primary residence up 0.6. So we're still seeing a lot of pressure in the real estate side of this,
right.
And that has not started to go down, and people had thought we might see some relief. We did last month, but not this month.
Vince, this is the granularity of Alan Greenspan. Look at each and every data. Is there an efficacy to look at real estate data, OER or otherwise?
The problem with that is there's a lot of data. And indeed, one reason the market might take good news out of shelter inflation, providing a good bit of upside to it. Overall inflation is Chair Powell has indicated that the forward-looking indicators of shelter prices that he looks at suggest there's going to be good news soon. The problem is once you delve into the details, you might get trapped in the seaweed.
So trapped in the seaweed, and yet this is sort of the seaweed that Jay Powell himself has sent us to. No, Mike was just talking about the core services ex-housing as the seaweed that the Fed is saying that they're going to hinge their inflation outlook on, and people pointing out that that fell to less than 5.2% on a year-over-year basis from 5.7% in the prior month. Taking a look at that type of cooling might give the Fed some encouragement to move away from some of the more aggressive rate hiking, or at least rate stabilizing projections that a lot of people had. Do you think that that's enough, Vincent, or do you think that this is perhaps a head fake?
I think it's a head fake. I think that you have it right, that The chair does slice and dice the data because he wants to get the slightly more than half consumer price basket that he thinks has a lot of momentum. Services less shelter still has momentum. That the shelter inflation is projected to continue to soften. That will be good news, but it doesn't change the core problem. There's some momentum there. The core question to ask, sorry to use that part, is was today's print disqualifying for Fed action in June? I think the answer is no.
So you think that the bar, Vincent, this is important. You think that the bar is more heavily weighted to fighting inflation still, even though a lot of people think that the bar is now in preserving financial stability and perhaps preserving employment. You think that people have that wrong?
I think the bar is about stopping, because once they stop, once they go a meeting without policy action, everybody is going to assume that the Federal Reserve has drawn a line
Må jeg ha penger på shorten?
policy firming cycle. And so you better be sure that when you stop, you're not going to look back at regret, just a couple months later. Remember, they slowed a little early in January relative to what, in retrospect, they think they should have done. They're having flashbacks to that right now.
What will you say then to people who say that this is evidence of the disinflation? This is another sign that it is naturally happening, especially as you see almost downright disinflation of certain goods.
Ute på den der oppe. Fikk med meg hele fallet. Jeg har fortsatt short der nede. Se hva jeg gjør for noe.
I agree absolutely that it is a sign of disinflation. It's a sign of a little bit of disinflation, but when you start very high above goal, it's a long process. The Fed will take this as encouragement. They should. Inflation is headed back to goal, but they have to be confident that it's headed back to 2%. And this is just another drop in the ocean.
We continue with Vincent Reiner of Dreyfus and Mellon this day of important inflation data moving the markets here. We looked at the 2-year yield with a huge 10 basis point swing of 405 back under 4% at 395 on the 2-year yield. Lisa, I've underplayed equities here. My fault there. Futures up 15, 41.49. I mean, I want a 41.50 print so I can round it up to 4,200. But I'm sorry here. We've got a nice little lift in the equity market. It's a stock market that just won't go down.
This idea that if the Fed doesn't raise rates more or even cuts them, it will be positive. Vincent, just quickly, do we have a sense here that if the Fed does sort of pull back, that will be a good thing and will allow growth to kind of persist?
It will support economic activity. It may not be a good thing over the medium term, because if they regret it, the worst thing that can happen to markets is the Fed having to tighten sometime later this year after having stopped.
Vince Reiner, thank you so much. With Dreyfus and Mellon, Michael McKee on page 42 of the report.
Well, we've got the core services ex-housing number, which everybody is interested in. It does go down to 0.27 from 2.9 on a month-over-month basis and down to 5.16% from 5.73%. Small, but some progress.
But that vector of service disinflation is still in place, albeit barely sloped.
But barely sloped. That's a good way of putting it. I was looking at the chart, and that's a good way of putting it.
How volatile has
you got the sound effects for the inflation report.
It sounds like a UFO. I am curious, though, about whether we have seen that incredible volatility that people are talking about.
Well, we have seen it in the month-over-month numbers here, but we're seeing in this core ex-housing, we've gone from 573 last month to 516. So you're looking at a 60 basis point move almost.
Yeah. All right. Well, we'll continue this conversation with Mike and with others coming up in the open. Andrew Hollenhorst of Citigroup joining, Eric Knudsen of Neuberger Berman, and Liz Young of SoFi. Also, Alexander Yoakum of CFRA on the other storyline, which is the regional banks.
Liz Young has been on fire on Twitter. Yeah. Really informative.
Very much so.
Stream or whatever you call it.
How do we get some sense of how we move forward from CPI Wednesday? This is Bloomberg.
Keeping you up to date with news from around the world with the first word, I'm Lisa Mateo. After making little progress on debt limit talks, President Biden and congressional leaders will head back to the drawing board on Friday to try and avert a U.S. default. President Biden called Tuesday's hour-long conversation productive, But House Speaker Kevin McCarthy said he didn't see
Jeg
it
dekte meg å gå lang.
The
Det
U.S.
her
has
er
announced
veldig
a
rart.
$1.2 billion package to bolster Ukraine's air defenses and ammunition stocks. The aid also includes satellite imagery services and equipment to integrate Western systems. The word came after Russia's President Vladimir Putin vowed to press on to victory in the war. Wages are rising fast across England and are
Jeg lurer på om jeg
finally
har
catching
slå av tiden
up to
her, for jeg får
inflation.
ikke det går så
Pay
tregt som her nå.
rose 10% in the past year for those
Det
taking
bare
new jobs.
lagger.
That's according to data posted on Reed Recruitment's platform. The figures point to a labor market that remains
Nå
red
har jeg
hot.
ikke
They
live
cast
her.
doubt on Prime Minister Rishi Sunak's vow to cut inflation in half this year. In Pakistan, former Prime Minister Imran Khan will be in custody
Hvorfor går det
of
så
the
tregt
country's
der, folkens, for
graft
meg?
agency for 8 days. Now that comes after his dramatic arrest on Tuesday, an event that triggered violent clashes across the country. It marked a sharp escalation in Khan's confrontation with Prime Minister Shehbaz Sharif's government and Pakistan's powerful military. And there's a sign that housing demand in the U.S. is starting to find its footing. Mortgage applications rose last week as borrowing costs ease. According to the Mortgage Bankers Association, applications for home purchases rose 4.8% last week to a one-month high. Meanwhile, the contract rate on a 30-year fixed mortgage, well, that ticked down 2 basis points to 6.48%. Global news powered by more than 2,700 journalists and analysts. I'm Lisa Mateo, and this is Bloomberg.
Chart IQ som memory leak. Hva faen tror jeg på?
You're so intimately linked to the future of the UK. What are you seeing when you go to branches and in the country?
Yeah, we're seeing a lot of anxiety at the moment. I think the recovery from the pandemic has been and is continuing to be very strong. So I think we're seeing the economy recover. But with rising interest rates, with inflation, those are things that peoples and families and businesses haven't had to deal with for 10 years. So a lot of business owners today haven't had to operate in that environment. So it's causing quite a lot of anxiety, which means for us, because we're up and down the country in branches and offices, we can spend a lot of time talking to businesses and helping them plan and deal with it. But it's very different, and it's not something people have had to operate in for a long time.
Hvordan fikser jeg memory leak? Er det noen som vet hvordan jeg gjør dette, eller? For det går så tregt som ass.
Our studios in New York and San Francisco. Our expert hosts of the data and analysis about the companies you know and the startups to watch. Plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology.
Control-Shift-S for bruken min.
Daily business show dedicated to tech right in the middle of the trading action. 12 p.m. on the East Coast, 9 a.m. in the West.
Det var jeg nå da. For at jeg kan ikke trade når det går så tregt.
In a multi-trillion-dollar industry, there's a lot of ground.
Hva gjør jeg nå da?
We're talking a lot of dividends, we're talking income.
We'll show you what's happening in ETFs like no one else. Bloomberg ETF IQ, Monday on Bloomberg. When U.S. jobs numbers are released, Bloomberg brings you crucial data at terminal speed and instant expert analysis. Nobody covers jobs day like Bloomberg.
Ikke jeg som får gjort noe nå da. Faen da.
I will be particularly focused on assessing the evolution of credit conditions and their effects on the outlook for growth, employment, and inflation. We're going to get a lot of data between now and our June meeting.
Good morning, everyone. Janet Williams, the New York Fed president, there now, and speaking on the changes before this inflation report. Your headline, as the market day opens here in 45 minutes, is simple. Inflation has moved the markets and continues to move the markets in the last 10 minutes. I'm using the 2-year yield as a barometer, 4.05%. Down we go 10 points to 3.95%, and we move even lower. Note price higher, yield lower to 3.94%, a substantial move. I'm going to call that 14-15 basis points in the 2-year yield. The NASDAQ 100 up 0.8%. S&P futures put it on up 28 points right now, 4.1. Joining me as head of all of our economic coverage, Michael McKee is with us. He's experienced at talking with Fed governors and Fed presidents and really has trouble with former Fed presidents because they're afraid of him. William Dudley joining us now, the former New York Fed president and Bloomberg opinion columnist. Bill, I got 8 ways to go here. I'll stay on script on inflation, and McKee, I'm sure, will have smarter things to say. 5% is flat out not acceptable. Everyone understands that. What inflation rate is that moment where Bill Dudley relaxes?
I think when the Fed gets the inflation rate down into the 2s and there's more slack in the labor market and wages are rising more like 3 to 4% rather than 5 to 6%, which they're doing now. The Fed's making some progress on the inflation front, but they haven't made much progress yet on the labor market and on the wage trend. So it's hard to see inflation going all the way back to 2% with the labor market this tight and wages this high.
In your studies at Berkeley, is it necessary to have unemployment go up to bring inflation down? Why can't we just move the inflation needle, the disinflation needle, and keep America employed?
Well, that would be the ideal outcome. It'd be great if we could operate at a 3.4% unemployment rate with 2% inflation. But historically, that suggests that has not happened in the past. The labor market at that level of tightness generates wage gains that are inconsistent with 2% inflation. And the Federal Reserve doesn't think that's going to happen. The Federal Reserve, if you look at their last summary of economic projections, expects that they're going to need to push the unemployment rate up above 4.5% to be successful in bringing inflation down. So they need to push the unemployment rate by up more than a full percentage point in their minds to be successful. And I think that's a reasonable forecast.
Bill, it's Mike. Switching to that jobs report data, the calculations people are making to get to that 4.5% by the end of the year, which the Fed has forecast, we need to all of a sudden start losing tens of thousands, if not hundreds of thousands of jobs a month. Do you see any prospect of that?
Well, I think this just reiterates the tension between what the Fed thinks in terms of how long they're going to have to keep rates high versus what the market thinks. The Fed thinks this is all going to be a very slow process. It's going to take many, many months. And I think when we get the next summary of economic projections from the Fed in June, you'll probably see them being less optimistic about how fast they can bring inflation back down to 2% and probably show a slower rise in the unemployment rate. You're absolutely right. The labor market is still pretty darn strong. And the Fed really hasn't gotten the progress that they've wanted on that score. They need payroll gains of 50,000 or less to push the unemployment rate up by a meaningful amount, and they haven't gotten anything like that yet.
Is there any way they can accurately forecast what's going to happen to wages given this post-pandemic weird kind of labor market that we have?
I think that they can see what's happening through a broad set of wage indicators. And what's happening is not really unusual relative to what you would expect given the tightness of the labor market. If you look at the JOLTS report, the Job Openings and Labor Turnovers report, that suggests that the labor market has eased a little bit, but that ratio of unfilled jobs to unemployed workers is still really high. Chair Powell has said that he needs to get that ratio down to about 1 to 1. Right now, I think we're operating at 1.6 to 1. So we still have quite a bit of ways to go.
Speaking of a ways to go, which is, I guess, kind of what policymakers are always going to say, are they there in terms of being restrictive enough, or is there anything in this data or the data that you've seen so far since the last meeting that would suggest that maybe they need to do more?
They think they're restrictive enough, and I think one reason why they think they're restrictive enough is we're going to see some credit constraints from the banking sector because of the turmoil we've seen in the banking area. So they're thinking that credit conditions are going to be tighter as banks pull back a bit. One area, though, where you have to be a little bit concerned is the housing sector, which is really the most interest rate sensitive sector of the economy, seems to be bottoming out. So if monetary policy is really tight and the housing market is starting to recover again, that does raise a question of whether the Fed is sufficiently tight.
Bill Dudley, I want to go to your latest essay, which has a single sentence in it, which is not inflammatory, but I think shocking to a lot of people. And I'm going to suggest that Bill Dudley, like Stephen Roach, who worked at another shop on Wall Street years ago, you people are looking for a new Fed mandate around Fed stability. Financial stability. Are you advocating a three-part Fed with a responsibility of inflation dynamics, jobs dynamics, and financial stability dynamics?
Well, I guess the way I would put it is
Ja,
financial
det
stability
blir
is a necessary
utrykningslag.
condition for an effective monetary policy. If you don't have
Hva
financial
er det på
stability,
det?
you lose control of monetary policy.
Ja, men jeg
So
skal
as
ta
part
så
of
få
your
vipsa dette.
monetary policy mandate, you have to have a
Ja,
very
ja, ja,
close
ja,
focus
ja,
on
ja.
financial stability.
Ja, men det er ikke så rart,
The
for
fact
folk
that
glemmer jo
the
det.
Fed missed what was going to happen in the banking sector. If you look back at the
Pus-
November
pus-
financial
spruter. Ja,
stability
men jeg-
report, there was nothing about the potential funding risk of regional
Kom igjen,
banks.
slik må det
There was
være.
nothing about the large mark-to-market losses on their balance sheet. There was nothing about the risk that uninsured depositors might leave.
Right.
So the Fed really, didn't capture that. And I give the Fed a lot of credit for the report that they published just recently on what went wrong with Silicon Valley Bank. I think they do recognize their supervisory failures, but that's not sufficient. Monetary policy also contributed to what happened because the Fed basically made interest rates very low for a very long time. They flooded the banking system with deposits. Some banks took those deposits and bought long-dated assets. That didn't work out for them. So the Fed Reserve's monetary policy did contribute to the problems that we've seen in the banking sector.
Yeah, I looked Mike McKee at this. And Stephen Roach screaming about a new Fed with a new mandate within a modern economy. And whether it was Roach at Morgan Stanley or Bill Dudley at Goldman Sachs years ago, this was the dovetail of market economics into the academic discussion that Chairman Powell has to face every day. And here we are looking at it again.
Yeah, Bill raised the question of what do you think the Fed's reaction function is now, given that the new monetary policy framework doesn't apply at the moment?
I think their reaction function is that they're going to keep rates at this level or maybe even a little bit higher until they see signs that they're confident that inflation is going to get back to 2%. And to be confident that inflation is going to get back to 2%, they need to see more softness in the labor market, reduction in wage inflation, and more progress on services sector inflation.
Bill Dudley, Hatsius and McKelvey are online too, and they just want to guesstimate to you, when do we get under 3% inflation? Give us your market economic analysis today of the timeline to 3%. When do we see it?
I think we'll probably see it before the end of the year because housing inflation is going to come down pretty dramatically. We've seen that the housing inflation in the CPI and in the PCE deflator lags a lot behind what's actually happening in housing. So that's going to start to turn down pretty sharply, I think, in the second half of the year, and that will help us on headline inflation.
Dr. Dudley, thank you so much for joining us. Writing for Bloomberg Opinion, superb essay, thought-provoking essay for all in commercial banking here from Bill Dudley on the latest banking crisis and financial stability as well. There's so many ways to go here, Mike. Let's go first to the market reaction. I got a NASDAQ up 0.8%. I mean, this is the optimist case, secular stagflation. No, it's a resilient American economy, isn't it?
Yeah, I mean, I think basically what we're seeing is a reaction to an overreaction after the Fed meeting where people started pricing in rate cuts immediately. Obviously, that's not going to happen, so they've got to readjust.
Anne-Marie Horton, in the west coast of Japan, now I misspoke earlier, folks, in Tokyo, but really at a lovely resort on the west coast, looking over to Korea as well, with Chair Yellen. I still call her Chair Yellen, excuse me, the Secretary of Treasury, a conversation on Friday. Explain why Yellen is different because of her economics and her Federal Reserve background. How does that make her a different?
Well, she understands what's going on with the economy and can make her own forecasts. But as Secretary of the Treasury at this time of the debt ceiling, she knows what both sides, Treasury and the Fed, can do, and she'll be in charge of deciding what they will do.
You'll be in charge of deciding. Brief questions for Anne-Marie Horton there. She is with Balance of Power, and she will have a conversation with the Secretary of Treasury here. Look for that early Friday morning, 3:30 New York time, 8:30 in London, deep into the afternoon in Hong Kong. Markets on the move after the inflation report. Stay with us. This is Bloomberg.
Business Week Radio, live weekday afternoons at 3 p.m. Eastern.
We got a little bit of talking.
But are you guys ready?
Harnessing the power of Bloomberg Business Week, Carol Messer and Tim Stanovic bring you the latest news from the worlds of business, technology, politics, and more.
How does the Fed play into this and what the Fed does potentially?
This is so exhausting and this is so all-encompassing.
Listen on Bloomberg Radio and streaming on YouTube and Bloomberg Originals. From the world of politics.
We're not going to be relying upon countries whose values we don't share.
To the world of business.
It's all about corporate power in the end.
Balance of Power, live from Bloomberg's Washington headquarters.
We're going to be more excited what's in store for you.
How long will it take? How many years?
Why don't we take this one day at a time?
Good luck. Everybody has a perspective.
Every weekday at 5 p.m. Eastern Time. Join host Anne-Marie Hordern.
It's the one area, really, of bipartisanship.
I think we're getting more of it.
That's optimistic.
And Joe Matthew.
The debt ceiling is looming. How close are we going to get to the line before you start to worry?
Alongside Kaylee Lines.
The door was open for regulators to do more, and that puts the Fed between a rock and a hard place.
As they deliver news.
This is such an important economic issue.
He's no longer trying to run away from
That really blew some minds.
Insight.
We can both invest in law enforcement and also make sure that communities feel safe in their own skin.
And analysis.
I think your audience will get this more than most.
This is not the Republican Party that you know.
It allows him to do what he did so successfully in 2020, which is run against crazy.
From and about politics' biggest power players.
This was the zombie case, and it's now more than well alive.
That's for sure. With two more potentially to come.
I'm willing to have this battle.
It is vitally important.
This is the intersection of Washington and Wall Street.
Bringing people directly to the decision makers that impact your investments and your life.
Balance of Power, every weekday at 5 p.m. Eastern, only on Bloomberg, your global business authority.
Did art conservation help you in any way to be a better investor? And should a lot of good investors who are learn how to be an art conservator as well, or not?
I think in conservation and art history and liberal arts, I think differently than a lot of people that have just done finance. And also, I think I mentioned one of the things is to do conservation, you have to really do a lot of work, pre-work, before you actually do a treatment. And so a lot of that pre-work is very similar to what I do in due diligence for investments. Lots of testing, lots of thinking about what could go wrong, lots of research. When I was an art historian, that was in the old days before the internet, but you'd sit in the stacks and you'd pull one thing in a bibliography on this and you'd sort of like a mosaic theory, put all these things together. I feel like I do that in my due diligence.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday. Shares popping after possibly optimism from New York City. For our viewers worldwide, I'm Lisa Abramowitz in for Jonathan Farrow, 30 minutes away from the start of trading, and you can see NASDAQ leading the pack as we prepare for what could be a disinflationary kind of relief. The countdown to the open starts right now.
Everything you need to get set for the start of U.S. trading. This is Bloomberg, The Open, with Jonathan Farrow.
Coming up, inflation in America showing signs of cooling off, giving the Fed room to pause as debt ceiling negotiations go nowhere. We begin with the big issue, another pivotal piece of economic data.
In the US, we've got inflation coming out today.
A lot of the details really do matter here.
Inflation is the big problem.
We're really looking at those core non-shelter services in this report.
When it comes to the CPI report, it's all about core services.
It really does just come down to the stickiness of core services inflation.
Especially outside of shelter, things like recreation, things like consumer spending.
And that's the inflation that's worrying for the Fed.
They have said that they're very data dependent.
Reiterated that they're going to be data dependent from here.
A lot of market participants really expect and want to see slowing in the economy.
A lot of the inflation data, I think it gets a bit more nuanced now.
And that is what you're hearing from a lot of people as they parse through the data, including Bloomberg's own Michael McKee joining us now. Mike, what's the latest from your read of the granularity of this report?
Well, the headline numbers come in basically as expected, Lisa, with both core and the headline numbers up 0.4% on the month for April. It's in the year-over-year numbers that we see a little bit of improvement, with CPI headline falling to 4.9%, which is a little bit of good news, I suppose. On a year-over-year basis, the core falls to 5.5%, so that is good news as well. But it's the core services ex-housing. You heard a couple of the economists in that String there talking about that we really see some good news, and that is when you take housing out of the services side of it, this is Jay Powell's favorite indicator, we see a decline from 0.27 to from 0.29 to 0.27 on a month-over-month basis, but a fairly hefty over 50 basis point drop in the year-over-year number, and so it does show some progress being made. What moved during the month? Well, the rent of primary residence. The rent numbers are still holding up housing, up 0.6%.
Yeah, short.
After 0.5 last month. Gasoline was up. You probably know that if you fill your tank. 3%. Used cars breaking a string of 9 months of declines, up 4.4%. Now that may revert next month. Services overall up 0.4, and that's where the Fed is still concerned about
bra pengar.
inflation as companies raise prices to keep up with their higher costs of labor. So
Jeg bare lurer på hvor tjukke huet folk Derfor så jeg litt usikker på om jeg skal tørre å ligge med en short.
Nailed it, but we are still seeing 2 rate cuts priced in starting in the middle of the year. And I'm glad you have some experts on to tell us.
Michael McKee, you're bringing us exactly where we want to go. Thank you so much, as always, for the incredible insight. And it's exactly that. You can give the data, but then give what the market response is, and perhaps you get a sense of where the bias is in terms of people looking for some excuse for the Fed to move away from the tightening cycle. Joining us now to discuss just that is Citigroup's Angie Hollenhorst and Neuberger Berman's Eric Knudsen. Andrew, I want to start with you. The relief that we're seeing in markets, what do you make of it at a time when inflation is still hot and yet it is cooling, and quite clearly?
It's interesting, Lisa. So I think coming into this report, there were maybe some heightened expectations in markets that we were going to get a really outsized increase in core inflation, which would point very strongly to the Fed needing to hike again in June. Instead, where this report leaves us is very consistent with expectations. I mean, came in almost exactly where we expected it to come in. And that just keeps the Fed in a really uncomfortable position where you have financial stability risks on one hand. On the other hand, though, I do wish to emphasize details of the report, but this was a 5th consecutive month of month-on-month inflation that annualizes to something around 5%. So we're just stuck at 5% underlying inflation. There's nothing in the labor market that would tell you this is going to cool down. So yeah, markets today, I think maybe expecting something a little bit stronger and relative to those expectations, we're getting a reaction.
Man ska ta gevinster
The
nå.
economic message should be we are stuck at inflation that is more than twice the Fed's 2% target.
Eric, what's your view on that? Basically, the push-pull of a Fed that is stuck between financial stability and inflation that, even though it is cooling, is still well above where they want it to be.
Yeah, I think that as many of your commentators said in the lead-in, this is what data dependent looks like. It means reacting to every print, both markets and now policymakers. And so we risk being Milton Friedman's proverbial fool in the shower, where the Fed risks, or certainly market participants risk, just reacting to the latest number and not keeping an eye on what the long-term trends and what the long-term outcomes need to be. This is a decent number in line with.
Nå gikk jeg glipp av en monstergevinst.
Markets are kind of jumping on this, but it doesn't. It's not a kind of declare victory number, as I was talking about with members of my team already this morning. This is still going to keep the Fed, kind of focused on what they need to do. Policy rates now have gone into positive territory on a real basis for the first time in years, just barely. The Fed is going to need to keep on doing that to get inflation down towards target, and above these still pretty high levels.
Eric, is your sense that the optimism that we're seeing baked into stocks as a result of possibly a pause from the Fed is warranted?
We don't think so over a 6 to 18 month time horizon, but we also wouldn't be surprised if you see some, positive movement in equities from here, because the underlying fundamentals, you just saw better than expected earnings. You've got 3.4% unemployment. You've still got a robust consumer. And so you could see some upward pressure on equities in the short term, almost relief from concerns. And yet, over a 6 to 18 month time horizon, we don't see the kind of valuations we see warranted. We think there will be further downward pressure on equity prices, given the tightening that we see in the system, stickier inflation, and more tightening likely to come when you think about the impact of banks and withdrawal of liquidity.
Andrew, a lot of people probably push back against the message that you've been putting out there, which has been pretty consistent, simply that we are going to see a Fed that is on hold for a lot longer than people previously thought, and this flies in the face of a lot of the optimism that we've been seeing. So how do you push back against people today who come out, including Bill Dudley, formerly of the New York Fed, saying that we're going to get inflation down to 3% by the end of this year? And this isn't even including some of the house price declines that are not factoring in to the same degree in this report as the next one. How do you push back and say, no, this is a stickier and longer lasting inflation that requires a fight?
Yeah, I think Eric said two things that are really important. One is, what is the underlying economic trend? What is driving this inflation? We've moved to a services-based inflation. This is being driven in part by labor costs that are rising rapidly. The underlying trend, the underlying dynamic is a very tight labor market that's pushing up prices. So, I don't think that we're going to see 3% core inflation this year, core PCE at least. That will probably stay north of 4%. And then the other thing that Eric mentioned, policy rates on a real basis, we're running around 5% inflation. We just got policy rates above 5%. Typically, to bring down inflation, you need nominal policy rates to go above the rate of inflation. We're maybe just getting there now. So I would just be really cautious about concluding that the Fed can start thinking about cutting here when really the balance of risks are towards hiking further.
Andrew, why then are people still pricing rate cuts into the market?
Well, this is the difficulty because we know we have these financial stability risks, and these are non-linear risks around the banking sector. If you have a flare-up in financial stability issues, and of course we had one in March, the initial deposit issue really does look quite contained. I think we saw some of that in the senior loan officer survey. We see that in the data that we get every week on bank deposits. But if we have this kind of generalized concern about the banking sector, that could become a very significant downside risk. That could lead the Fed to cut. So you have to have some probability afforded to that. I think the market is doing that. What the market is probably missing here is that, again, inflation is just stuck at too high a level. I mean, it's really, I would agree with Eric, it's just hard to look at this number and think that the Fed is going to see anything here that tells them that they're on that path to 2%.
Eric, I was struck by something that Ira Jersey of Bloomberg Intelligence wrote, basically saying that CPI has been one of the most traded events of any potential data that's been coming out. How do you look at this in terms of a trading moment, in terms of an asset allocation perspective? Do you trade off this? Do you adjust your expectations, or do you just basically use that in sort of the sort of metric of longer term investing?
So, most of the time, and most of our risk is going to be taken with a longer term horizon, say 6 to 18 months, and trying to achieve clients' goals over a much longer term using, just strategic asset allocation, capture long-term exposures. And that gives us an edge because, especially in environments like this where markets are trading every single data point and you see massive day-to-day volatility off of the latest print, often, reversing what happened the day before, we actually think that we have an advantage for our clients in terms of looking a little bit longer term through that. That being said, there are ways to take advantage of some of the shorter term movements, say in volatility markets, where you can take advantage of differences between, say, equity volatility, which is very low, considering everything, and is consistent with long-term treasury volatility. And you compare that to, say, 2-year treasury volatility, which is extraordinarily high, and that maps to underlying sector volatility. So trying to take advantage of some of the distortions and discrepancies that in volatility terms, for example, and being able to position portfolios to take advantage of that in the shorter term can create some interesting opportunities in a very kind of day-to-day, data-driven market.
Just quickly, Eric, does that mean that you're betting that volatility in stocks is going to go up, or that volatility in bonds is going to go down, or both?
More that volatility in the 2-year treasury has to come down through time. That's how things are likely to normalize. I think people have been betting that, equity volatility has to go up. Well, equity volatility is very high if you look sector to sector, security to security. It's just not at the index level. There's not much going on there, or so it appears at the index level. And so, one of
Har det stoppat helt eller?
fixed income team is that fixed income volatility has to come down before equity markets can heal. And that's what we expect to happen over the course of the coming 6 to 12 months.
Eric Knudsen, Andrew Hollenhorst, both of you are sticking with us. Let's get a look now at some of the stocks that are moving just ahead here of the opening bell. Abigail Doolittle has those. Abby.
Hey, Lisa. Well, it's interesting because we, of course, do have the futures popping higher after that CPI print, but we do have one big laggard to take a look at. In fact, I think that this may be the worst day for Airbnb in its young life since IPOing back in December of 2020. Shares are plunging down 13%. The first quarter report was strong, but a muted outlook has these shares lower.
Capo.
Forward growth is moderating. Plus, one analyst is saying that there's clear competition from Booking. Occidental Petroleum also reported its first quarter. Shares are down about 1%. There was an earnings and a sales miss. However, production got
Hvor mange sånne shitcoins kjøper du slengen av?
see how this day shakes out. And then finally, we've had a bit of a turnaround for PacWest, the beleaguered regional bank. It is up 5% after having been lower in the pre-market. This pop happened after that CPI print. Since last week's low of $2.48, Lisa, the stock is up nearly 150%.
Thank you so much, Abigail. Coming up, back to square one.
Everybody in this meeting reiterated the positions they were at. I didn't see any new movement.
We agreed to continue our discussions, and we're going to meet again on Friday.
And we're getting more of this, and we get another meeting and another one. President Biden and Speaker McCarthy making little progress on Capitol Hill. They will try again. That conversation coming up next.
Futuren er opp over 1% nå. USA kommer til å åpne rett opp. Jeg er jævlig usikker på... Jeg bare skal lukke posten min og så gå på Nasdaq. Jeg gjør det. Ute. Jeg slår av og på PC-en, for det går for tregt. Jeg må bare gjøre det. Sånn, så er jeg tilbake om 2 sekunder.
So Fabian, talk to me a little bit about the ocean.